And then we'll decide whether Alex is keeping it or not. Okay, Alex, that's what we're doing.
Opinions solicited this time around. You can tell me what you think, of course. And well, I must say that I'm getting mixed reviews so far. It's early days.
Yeah.
But let's talk about. Okay, so that's on a lighter note. By the way, you don't have to. Make sure that you do send in your questions, though, whether or not you comment on my beard. You can send us a message on that number that you see on the top of the screen, or you can call us on the number that is on the bottom of the screen. In the meanwhile, let's get you where the markets are right now, because you have gains of about 0.8% for the benchmark Nifty 50, and you thought that banks would be at the forefront today. And that has panned out. Gains of about 1.7% or thereabouts for the Nifty Bank. It's at 55,200. That is very close to all-time highs which were hit earlier on in the session. May not be all intraday high, and indeed that is a fresh all-time high. But really it is banks that are powering through. And the only thing that has surprised in the morning is the performance of IT as a pack. And really, there was an expectation that this pack would be under pressure on account of the Infosys results, which was a muted Q4. And if anything, the outlook for the coming quarters is not great either. But there is positivity on the street. The question is whether or not this is a relatively short-term phenomenon, and perhaps we can get Vikas Jain's view on this as well. But technical analysts earlier on in the program, or not program, but in the day, pointing to the possibility of short covering playing out for Nifty IT. What are the gains? You have Tech Mahindra, Mphasis, Oracle, Coforge, even Infi gaining close to 2% at this juncture, and despite the weak Q4. What else is standing out to you?
Right, so something like a Spandana Spurti is, gaining in trade. It's up by about 12.6%. Just Dial is another counter on the back of its, earnings. Significant margin expansion, almost 300 basis points on the back of cost efficiencies is what the management is stating. There's Nippon Life, which is up 6.3%. Utkarsh Small Finance Bank up about 5.7%. There's Vijaya Diagnostic, J&K Bank, Adani Power, Aavas Financiers, Tata Elxsi from the IT pack doing well in trade today. Some counters not doing well. Well, Avanti Feeds continues to see the pressure. Although tariffs are paused, this counter is still witnessing significant heat. It's down by about 4% odd. Kesoram Industries again down in trade today. There's Aarti Pharma down by about 3 odd%. Network 18 down by about 1 odd%. Valor Estate also down by about 4 odd%. So these are some counters that are buzzing in trade. With that, let's also welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Vikas Jain, Head of Research at Reliance Securities, joining us now. Welcome to both of you, gentlemen. Our first caller for the day is lined up. Raju is calling in from Hyderabad. Raju, a very good morning to you. How can we help you?
Good morning, madam. I have brought HDFC Kotak Mahindra Bank at 1645, 700 shares.
Okay.
Can I buy, can I sell or hold now?
Okay. Raju, when you've bought this, did you see the technicals or the fundamentals of the bank?
Can I sell or hold? That I want to know it.
Okay. Vikas, I'll take this up with you. What are the charts indicating for something like a Kotak Mahindra Bank?
So Kotak Mahindra Bank has been the leader in this current upmove of Bank Nifty rally. So if you look at the stock has witnessed good amount of upmove from the lower part of 1850, 1900. Now it's at multi-month top. So we believe the stock will continue to do well. And it has also broken out from the suggestion of its 3 years, 4 years cycle. So the stock has further led routes up move to near to 2350, 2400 levels. So we can continue to hold on. The results are yet to be out, so we believe a leg of post the results also to be witnessed into the stock. So we can book profits near to 2350 and hold it to the position.
All right, so that's a view on Kotak Mahindra Bank, up about 23% over the last 6 months. And in fact, it has gained along with the rest of the banking pack in the recent past. You see that in the trend line on the screen. We've got the next question from Chennai. Zamir is writing in and asking about Lloyds Engineering. He has bought a significant quantity, as much as 12,000 at a price of 27 rupees. It is more than doubled from his buy price, or it has close to doubled from his buy price. The question is that should you hold at this juncture, especially in the context of the corporate action? Saurabh, on the fundamentals, would you hold?
Like
do not know much about this company, but clearly on the valuation side, it looks expensive, trading at 16 times to book value and 70 times to its trailing earnings. So my sense is it is better to book partial profits.
Let me get Vikas's view as well on the charts. Is this the best point to book profits?
Certainly book it, because if you look at, no doubt his purchase price is pretty low at 27, but he has also witnessed a high of around 90 odd rupees post his investment. And from 90 odd rupees, it again declined near to 45, 46, making a base, and now moving higher, 61, 62. So you can book some amount of partial profits, because mid caps and small caps will take some more time to move up the ladder from current levels. So you can book candidates near the resistance area.
Okay. All right. So let's take the next question. And in fact, this is a caller from Bengaluru. Suman is calling us. Good morning, Suman. How can we help you today?
Good morning, Nadir. So this RCF, I wanted to take the position at this current market price for 18 months period.
Okay. So basically you want to know, based on the price trends, whether this is the right moment to buy, or are you more keen on understanding the fundamentals of the fertilizer space and the chemical space, and whether or not now is the right moment to deploy?
Yeah, fundamentals.
Fundamentals. Okay. So Saurabh, based on the fundamentals, I guess the focus should be on the monsoons likely to be normal, the expectation of a normal cultivation period for the agriculture sector and here in India. From that perspective, would you buy an RCF at this point?
I think the last year Rabi season was good, and after the SkyMet initial weather estimates that this year rainfall is going to be very normal. Since then, I think there has been a lot of buying activity happening in the fertilizer space. Talking about specifically RCF, I think it is a good company to choose in the pack. The company's profitability is also improving if you look at the numbers. So in my sense, the likelihood of monsoons will augur well for companies, fertilizer companies and RCF also. My take is he can buy.
Why is the view coming in on RCF? Our next query is from Rajesh, who's writing in from Bengaluru. He has 4850 shares of Ola Electric, bought at an average price of 72.5. So he's sitting on a significant loss of 1 lakh rupees, and he wants to know whether he should hold, average or exit. Saurabh, I'll come back to you again. What's the view like for Ola Electric?
View is negative with respect to the company sales and lot of allegations about the promoters and the work style ethics also. So in my opinion, I think it is better to book profits if he gets some kind of a relief rally.
So that's the view with regards to where Ola Electric is concerned, and sell is what Saurabh is suggesting. Our next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Tube Investment of India.
Okay.
I'm holding 40 shares of Tube Investment at, one moment, at 2502, ma'am.
Okay, yeah.
Yeah, ma'am. Could I wait until the results, or should I add more, or regarding Tube Investment, I would like to know more.
Okay.
Like its all-time high is around 4,700.
Okay. So I think, Dheeraj, you saw the technicals and bought the stock.
Yes, ma'am.
Okay. All right. I'll take this up.
One more thing, ma'am. Can we accumulate Adani Enterprises?
I will. So, Dheeraj, we'll take only one query per viewer. So you have to choose.
So I'll choose Tube Invest.
Tube Invest. All right. Okay. I'll take this up with Vikas. Vikas, what are the charts indicating for Tube Invest?
The charts are strongly. Yeah, the charts are strongly positive for Tube Investments. No doubt it has been a laggard in the last few days with respect to the market run-up. But we believe the technical formation remains strongly positive. It has made double bottoms near the range of around 2450, 2480 odd levels, and the stock is witnessing some amount of strong move. So we believe with the F&O rollover and the price action forming through, the stock can move higher near to 2750, 2800 levels over the next few days, weeks. So we can continue to hold and add more.
Continue to hold, add more is a view. Hopefully that answers your question on Tube Investment. We've got a next viewer who's looking for a very long-term view, 10 years on Motilal Oswal, and he had bought at levels of 800, 420 shares. So he's gotten at slightly elevated levels. The stock is up and about today though, 5% or 4.5% gains. a very long-term view, so I'm not sure whether you've looked that far, Saurabh. The point is that, we are bullish. Everybody is bullish about the mutual fund story here in India. At just over 5 crore unique investors, I guess you're looking at an industry that is only scratching the surface. If you're talking about 70 plus crore PANs in India and various other metrics, there are more people betting in lotteries than they are investing in mutual funds. So from that perspective, it is a sunrise sector. Would you continue to invest in or hold your investment in Motilal Oswal?
The growth is, very much linked to how the market behaves, and in the long-term, from 10 years perspective, I think one can easily say that the Indian growth story is likely to shine, and so companies operating in the financial services will also do good. So, in my opinion, I think we can certainly expect that the benchmark indices will gain at a pace of maybe 12 to 15% per year at a 10-year CAGR, and because of the lower penetration and the increasing penetration, company like Motilal Oswal is likely to grow in the higher double digits in the next 10 years. So my take is it is a hold.
Okay, all right. So it's a hold on Motilal Oswal. Govind is calling us from Hyderabad, asking about Enviro Infra. Morning, Govind. What about this company stood out to you?
Yeah, good morning. Good morning to all, sir. Actually, I have pleasure to receive my call, actually. Sir, Alex, sir, actually, this is the wastage theme, actually, wastage recycling theme, actually. India is basically broad wastage is there, actually.
Right.
In future also, you have to reduce some recycling themes, you have to encourage and then reduce the environment, actually, for a better, actually. Actually, Tata Tech is already one company there actually previously, but I think maybe that is a slight expensive values.
Yeah.
I think this is the new theme actually. This is another new emerging company, Enviro Infra.
Yeah.
I can purchase some of the shares at the time of IPO. After that, I will add some more actually. On the up of 260 there.
Okay.
I think so maybe add some more, at least another 700 or 800 shares for at least 1 to 2 years long-term prospect.
Okay, so you want to know about the long-term prospects. Okay, Saurabh, there are quite a few options now. In fact, there are few waste management companies that have come through, right? There's Enviro, there is Vatek Wabag, as we pointed out. And if you broaden the space, and you're also talking about Anthony Waste, which we featured, by the way, on KYC, on Know Your Company. How would you rate Enviro Infra, and would you continue to hold? Would you add more at this point?
Well, the business is good, but it is very difficult to say it is good at this price. Even after the correction, it is trading at 10 times to book value, and which looks expensive to me. I think it is a very small company. I think Vatek Wabag is also expensive. Anthony Waste does business with a low margin profile. And don't know about Enviro Infra much, but it's a recent listing in the same space. So my opinion is, if you want to invest for the long term, I think better to wait for some time. I think you may get lower prices.
View with regards to where Enviro Infra is concerned and the entire waste management sector. Our next question is from, do we have the name of the Vinay? Okay, Vinay is writing in from Mumbai, and he is holding Utkarsh Small Finance Bank at 30.7 and holding significant quantity of 34,000. So he's sitting on a loss of around 1.5 lakh rupees right now, and he wants to know whether he should hold, exit, or what should be the next course of action. Because I'll take this up with you. What are the charts indicating? Is there a possibility for him to recover some of his losses in the near term?
Some of the losses can be recovered in the near term, but again, there could be an exit opportunity, because if you look at the small finance banks or the microfinance companies have not been done great over the last 2.5 years, and still conditionally it poses challenges in terms of it. So we believe anytime any rally near to 28.5, 29 levels would be a good exit point for him to exit the stock and invest into some tier 2 private banking names like IDFC Bank or RBL Bank, which looks attractive.
Okay, and in fact, we also have a query on IDFC First Bank, Angel. So I hope that answers your query as well, because she's also holding 3,000 shares of IDFC First Bank, and she wants to know whether this is the right time to enter. So I hope, Angel, that answers your query. All right, our next caller, Vijeta from Kolkata, is calling in. Vijeta, very good morning to you. How can we help you?
Hi, good morning.
Good morning.
So I have a query on LT Foods.
Okay.
I have 150 shares bought at a price of 185.
Okay.
I want to know the long-term perspective about this share. So I want to hold, say, for 2 or 3 years. So what is the target price that I can look for?
Okay, got your query, Vijeta. I'll take this up with you, Saurabh. With everything that's happening right now, right now we do have a 90-day pause on tariff. But if that pause gets lifted and if we are imposed with tariffs, LT Foods is one of the counters that might get impacted because they do export a large amount of rice to the US. Around 34%, if I'm not wrong, is the percentage of their revenue from US. What's your view with regards to LT Foods and any other rice manufacturing or even trading counter that you think would be a counter to invest into right now?
I think the point you have talked about, any company working in the consumer staple space can fall prey to the tariff. But in my opinion, I think there will be some rationality in imposing tariff because earlier it was a blanket tariff. In my opinion, I think US also doesn't want to raise its food inflation, and being a rice company, LT Foods, I think it will not be impacted much going forward. That is what my opinion says. So in my opinion, I think she can hold.
Can hold on to LT Foods, but remember that as Mahima just pointed out, with Apex Frozen, if I'm not mistaken,
Avanti
Feeds, which is down about 4% in trade today. There's a lot of volatility in these stocks because of the kind of uncertainty that's swirling around global trade. As things stand, of course, by the way, you might have seen those visuals of JD Vance in India. There is some talk of a bilateral trade agreement between India and the US which could be worked on. And sources are telling NDTV Profit that this could in fact be wrapped up before fall, before the deadline. And so that's certainly something that could be a tailwind for all of these stocks. But there's a lot of uncertainty at this juncture. Remember that. Yes Bank is a stock that we're talking about next, and the bank came out with a decent set of numbers, in fact. And all of the metrics look pretty decent. You had an expansion in the NIM as well. You had a decent ROA, a return on assets as well. Ranjan Karkera from Bengaluru wants to know about this next, and he's holding Yes Bank at a price of 23.5. In fact, we've got a few other viewers also who have bought around that 21 to 23.5 level. The question is, would you hold on for the next 5 years? In a very long term holdings being sought, I'm pretty sure you don't have visibility for that long, but then this is a dark horse, if you can call it that, in the banking pack that you would bet on, right? So would you deploy more at this juncture based on what you saw in Q4?
Yeah, I think you are absolutely right. The numbers were good on all the parameters, but in my opinion, I think the balance sheet is still not out of woods. I think there is some problems with respect to its NPAs and the cleanliness of the book, and with respect to the growth. I would rather suggest to bet on the mid-sized banks like AU Small or Federal Bank for if you have a time horizon of 5 years. Okay,
Federal Bank, and this is a pick that we had earlier on in the day as well. India Market Open, we had Parag Thakkar talking about Federal Bank and the fact that Mr. Manian was taken in charge. He feels, Parag Thakkar, that a similar story to ICICI Bank will play out, and that's quite a big call. So keep that on your radar as well. Up about 3% in trade today is Federal Bank. We've got the next caller from Bengaluru. Solar Industries is the name of the counter he wants to know about. Ray, good morning. How can we help you today?
Hi, good morning, Alex. Can you hear me?
Yes, I can hear you very, very clearly. Good morning. Please go ahead.
Yeah, good morning. Yeah, so I bought Solar Industries in Feb, and it has risen almost 30% since then.
Yes.
So I would just like to know if it is time to book partial profit, or I can still hold on to the share.
Okay.
And in terms of both technical and fundamental view, if you can provide, it will be great.
It would be great. But then when you bought it, I just want to know, Ray, what was the time horizon that you had in mind?
3 to 6 months.
And so, okay, so are we done with 3 months? When did you buy this?
Feb.
Feb.
It's just about 2 months.
Just about 2 months. So, but did you have a target in mind when you bought the share?
13,000, I was expecting somewhere around that in 3 to 6 months.
Okay, Vikas, I will come to you then. We've already made quite a bit of ground and quite a stiff target that he set himself, 3 to 6 months, right? We're talking about 40% or thereabouts, if I'm not mistaken. Is there a possibility of 13,000 on the cards?
Well, 13,000 could be on the cards. That is almost near to its 52 previous 52 week high. But I would suggest to book some profits and get out because the stock has seen a good consistent move since he has purchased. No doubt his timing would be right, same coincidentally with the markets bottoming somewhere with the solar industries per se. So he could put some profits as the stock is also into the F&O basket, so which would witness some amount of rollover activity and it will again chip in near to 11,800, 11,600 odd levels. So some partial profits would be recommended.
Partial profits on solar industries, but Saurabh, any view on the fundamentals since it's been sought?
The companies on the operational front, companies posting 30-40% growth in both in the top line and bottom line year on year. On the valuation front, it looks expensive to me. I think it is better to take some money off the table.
Better to take some money off the table is the view coming in. So contradictory views there. While Vikas seems to be bullish with respect to the charts, Saurabh says
I think he had a sell call.
He had a sell call. Okay, yeah. Then my bad. Okay, then both views are in a similar fashion. Both are saying book some profits right now. All right. The next query is on Reliance Industrial Infrastructure Limited. Karan from Kolkata wants to know whether he should hold or sell. He's holding 83 shares bought at 1075 a piece, and 1 year is his time horizon. Saurabh, I'll come to you on this one. What's the view like?
I would suggest to exit.
Okay. Exit is the view coming in on something like Reliance Industrial Infrastructure. The next caller, Soma is calling in from Bengaluru. Soma, a very good morning to you. How can we help you? Okay, I think we seem to have lost the caller, or we do have his query. His query is on SBI. He's holding 255 shares bought at 730 a piece, and probably wants to know what should be the next course of action for him.
It's a very good buy.
Absolutely, and sitting on profits of around 23,000 odd rupees. Saurabh, what's the view like for SBI?
I think it is clearly a hold for long term.
Okay, hold for long term is the view coming in.
Why don't you also get Vikas's view? Because Vikas, the private sector banks really are what we've been focusing on, but I think very quietly, relatively speaking, the public sector banks are also ramping up. State Bank of India, 3% up in trade today itself. What are the prospects on the charts?
The prospect looks promising. As you said, suggested Alex, that private banking sector has been dethroned and has outperformed. It has scaled a new all-time high. But in fact, today PSU banking sector index has also broken out from its 200-day average with strong volumes. And with SBI leading the front, we believe State Bank could see some amount of more. So 860, 880 could be possible under the target, which is near to its previous 52-week high. So the stock should do well. We can continue to hold.
State Bank of India, both on the fundamentals as well as on the technicals. We've got more questions coming up on the other side. We have to slip into a very quick break. Do stay tuned. We'll be back before you know it.
That's huge. That is a biggie. It's on. Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your
Hi, welcome back. We're talking about all of your questions on the stock markets as things stand right now. And we've got quite a few of your questions already answered, but there are more, of course, that have come through. And the first one on this side that we're taking is on GMR Airport, and Sandeep is writing in, and he's asking about this. He's bought at a level of 99 rupees, which is above the current market price. He's bought 1,000 shares, and he's wondering what the prospects are. Saurabh, on the fundamentals, the latest update came through on the fourth quarter, and they have handled 8% more traffic than they did in the same quarter last year. So it's positive, it's looking good, right? Would you continue to hold this?
Yes, I mean, you're absolutely right. The traffic is also rising, and there is a possibility of hike in the fees also. So in that sense, I think it makes sense to hold.
That's the view with regards to where GMR Airports is concerned. Our next question is on RVNL. Bala from Coimbatore. Okay, so we are taking his South Indian Bank question. So he's writing in, he's saying the current situation of South Indian Bank is bought at 30 rupees per piece, and he wants to know as to what should be the next course of action for the next 3 months. Because in terms of charts, what are they indicating?
The charts looks pretty promising because if you look at the stock has broken from its weekly structure, continuously making a high top, high bottom. So it looks pretty promising. We believe the stock can move further high near to 30-31 levels, which is its purchase price. So we can continue to hold on.
I'm going to try and take a combo view since banking really is the conversation of the day today, and quite a few of these banks are doing particularly well. We've got Rajan's question, and he's asking about HDFC Bank, which he's bought at levels of 1750. Pull up HDFC Bank. It's done particularly well in the recent past. In fact, it is up to 1,922, and he's looking at whether or not he should continue to hold or book some partial profit, or at least he's got 50 shares, so he can book a considerable amount. And also on the fundamental side, I'll come to you after this, Saurabh. Dinesh from Gurgaon is asking, any pocket of relative value comfort in the banking space where you can hold for a period of 6 months? And I know that it's a relatively shorter term horizon, but something that you could see turn around on the value basis. So first, on the technicals, Vikas, would you book profits in HDFC Bank?
So continue to hold on HDFC Bank because if you look at the stock is a strong outperformer over the Nifty 50 basket in terms of Bank Nifty. Bank Nifty has broken out almost near to all-time high, and the outperformance will continue. So maybe the decline would be 40-50 rupees here and there, 2.5-3%, nothing more than that. It looks from the current levels. So you can continue to hold on. Maybe near the round number mark of 2,000, some profit boosts can be achieved.
That's the view on HDFC Bank. What about you on the fundamentals, Saurabh? Would you buy anything right now? Where do you find relative valuation comfort? Because we moved very quickly on these banking stocks.
I think if you look at the long-term valuations, both private and public sector, there are many stocks which are available from at their long-term average or even below their long-term averages. In the last 2-3 years, banking hasn't performed in the market. In the private space, I would suggest maybe he can go with the Axis Bank, or in the PSU space, Indian Bank also looks good to me.
Okay, so that's the view with regards to where the banking sector is concerned. Our next caller, Jyoti, is calling in from Karnataka. Jyoti, a very good morning to you. How can we help you?
I want to know about Trent shares. Shall I hold or sell it? I'm having 2,000 shares Trent at purchase rate 2,600 rupees.
Interesting, Jyoti. You've bought at the right levels, I must say. You're sitting on a significant profit of almost 54 lakh rupees. So kudos to that. I believe you want a fundamental view on this, Jyoti.
Yeah.
Okay.
What is ultimately what I have to do? Whether I have to sell it or hold it.
Okay. Saurabh, I'll take this up with you. He's bought at the levels of 2,600 levels. That is quite attractive. Although the stock has taken a significant beating, he's still sitting on a profit of around 54 lakh rupees. Do you think that he should book partial profits or continue to hold? What's the view like?
When the growth was coming, the multiples were also expanding. Now the growth is tapering off, and the multiples are also cooling off. They are squeezing now. At this current price, also the stock is priced at about 100 times to trailing earning, 40 times to book value, which is quite expensive. I think you have decent position in the company, and it is good to take money off the table. I think they are good profits. Even you haven't sold it off at a higher price, but these prices are also good to exit your position.
I want to spend a little time, Jyoti, on this one, if you'll allow me. You bought at levels of 2,600. Can you help me with when you bought Trent?
I don't remember
approximately,
exactly, but
which year, for example? Was it post-COVID?
Maybe post-COVID.
Post-COVID, okay. So, and when it hit 8,000 levels, you were not tempted to book at that point? Book your profits, Jyoti?
No. Actually, I sold some little bit shares, but the report was that it will go up because there are a good number of positive ideas that were given to me by all the even your NDTV Profit also was telling that to continue the same. But it has come down from 8,000 to 4,000 and odd.
Yes.
So I thought of rethinking about this.
Yeah, it makes sense. And it has recovered from those lower levels as well, which is interesting. Jyoti, now, follow-up question, because you have a considerable holding, are you comfortable sharing with how much of your portfolio is Trent right now? Because the stock has also gained quite considerable since you bought it.
Yeah.
So how much of your portfolio is Trent?
My portfolio strength is about 40%. A large number of shares are in this only.
Okay. I understand. So Saurabh's advice to you is maybe take some money off the table. Saurabh, if he has 2,000 shares, which he's acquired at 2,600, and you're suggesting that he book some profit, take some money off the table, where do you suggest that he deploy it? If he's saying that 40% currently is Trent, where do you suggest that he deploy it?
I think banking sector makes sense, and tactically, I think he can also invest in the fertilizers. In the banking, I would suggest him companies like AU, Federal, Axis, Indian Bank, and the fertilizer space. I would suggest Chambal Fertilizer or maybe Paradeep Phosphates.
Okay, so those are the replacements for Trent. If at all, Jyoti, you want to book profits, is the view coming in from Saurabh. All right, the next question is from Mahalakshmi, who's writing in from Hyderabad. She's holding 800 odd shares of DLF from October 2024 at 884 a piece and is sitting on a loss of 1.65 lakh rupees. Wants to know whether she can average out right now or not. Because I'll take this up with you. First, because she wants to know if current levels are attractive enough to average out and maybe reduce some of her losses, or do you suggest booking losses completely right now?
So I would not suggest to average also, neither to book a loss. She can continue to hold maybe a higher side of around 725, 730 near the 100-day average. A pullback could be expected, because if you look at the stock has witnessed some good rebound from the lower part of 555, 590 to 680 odd levels over the past 10, 12 trading sessions. So it would not be feasible to average at current levels. Maybe run up to the move, the real estate sector could do pretty well with the strong broader market outperformance. So 720, 730 could be a good exit point to enter, which is near to the 100-day average.
Okay, so that's the view with regards to where charts are concerned for DLF. Saurabh, she's also asking if this is the good time to invest in something like a macro tech. If not macro tech, something in the real estate space that you feel is attractive enough to enter right now?
I think if you look at the real estate space, there have been price increases in various pockets, and there were good sales coming in. And now I think the prices are also getting stabilized, and the sales are also cooling off. In many cases, we have witnessed March quarter didn't went good the way it used to in the past 2-3 years after the COVID. And in my opinion, I think some kind of a top out has been made in the real estate for the time being, and these stocks are cooling off. So I would suggest, I think, better to refrain from investing in the real estate space.
Okay, so yeah, bear in mind that this sector as a whole has seen quite the gyrations between September of last year heading into December, and then it's seen a roller coaster ride, if you can call it that. It's up in trade today, but there you go. So you see quite the wild gyrations to the peak around December, and then it's fallen off the cliff from that point. Good pulling that up. Let's talk about Britannia next, and we've got Niva from Chennai, who's bought 4 shares at a price of 4,826 in the green right now, and wondering whether to hold or sell. What is the target price expected for the long term? Not defined the long term here, but since the target price is being spoken about, Vikas, on the charts, what does it look like?
Price can be higher near to 5850, 5900 levels, because look at the stock has consistently moved up from the lower part of the range of 4650, 4800 levels. It has convincingly crossed its 200-day average with strong volumes and sustaining higher over the past few days. So maybe some consolidation where the IT and the banking part of it have been moving around today's trade, and consumer is at the receiving end. But once the rollover happens, we believe the stock could further move higher. So 5850, 5900 could be the potential targets for Britannia.
Next Question is from Satyan, who wants to know whether he should hold Chambal Fertilizer, now about 35% of profit that he's sitting on, and wants to know if he should either hold or switch to some other counter like GNFC. I'll come to you, Saurabh, on this one. What's the view like?
I think he can still hold on to the Chambal Fertilizer, or in case he wants to shift money, I think he can shift money, take money off the table from some profit of Chambal Fertilizer and shift money to the Paradeep Phosphate.
Okay, interesting. And we also have a caller lined up. Do we have him online? He's bought Chambal Fertilizer 600 shares at 10 rupee a piece. Amog Gavai, good morning to you. Can you tell us when did you buy that? Do we have Amog? Okay, it seems like we've lost him, but 10 rupees, the stock is currently trading at 686, so sitting on a profit of 4 lakh rupees right now. Vikas, with respect to where technicals are also concerned, what do you think? Is there a further upside there?
The stock is consistently making higher tops and scaling into 52-week high. It is consistently outperformed into the April expiry. But once the stock strongly outperforms in any particular expiry, then we expect some amount of sideways to corrective action in the consecutive month. So would recommend to put some profits if somebody is holding.
Some profits, and there are several avenues that you can consider deploying, and we've discussed some of them as well. Because I haven't asked you, where are you seeing value right now? Because I think a lot of people have been holding stocks despite the kind of ride that they've had over the last 6 months. And maybe some of them, it makes sense to book profits as you've discussed, as Saurabh has discussed. Where do you see opportunities right now?
The capital market space looks interesting. So we have witnessed a good amount of move into the protein and the capital market related stocks. So protein looks pretty interesting from current levels. The company has been prettily poised, and we believe the stock will move further higher. The company has also finished its QIP last quarter near to sub 1650, 1700 levels. So we believe the stock is interestingly poised, and the technical setup also looks pretty attractive. So protein looks pretty good from the capital market ecosystem, followed by Motilal Oswal or Angel One.
Okay. All right. The next question is on Tata Tech, relatively short-term question. Bimal from Mumbai is asking, he's bought at levels of 850 and he's got 1,000 shares. He's in a loss right now and he's looking at getting a technical view for the next 6 months. Vikas, again, coming to you on the chart, 6-month view, where would you place your target and what would you keep as stop loss?
Continue to hold on in terms of Tata Tech. No doubt the stock has witnessed good amount of volatility over the past 4.5 months, and it is a continuous decline. So from the highs of around 1130, 1150, it made post the IPO of strong listing. It has been a continuous decline. But we believe where the IT sector has rebounded and the risk reward ratio remains favorable in terms of loan from the IT sector, maybe it could take some amount of time, and it has got a view of around 2 quarters, which is around 6 months. So we should hold on. We can move the stock, expect the stock to move higher near to 745, 750 levels.
Okay, Parth is calling us from Gujarat. Parth, kem cho?
Ekdam majama, sir.
I think you've got nerves of steel, Parth, because you bought Suzlon at 5.3 and you have held. When it has gone to 80 rupees and it has fallen to 57 rupees, you've still held. Can you tell me how you're getting that kind of confidence?
Sir, it was just because I knew that this solar sector, the wind sector and the renewables have been hyping up right now. So that was my sole reason, and I don't know why, but I have some kind of love with Suzlon, I guess.
Okay, and for a stock that has given you the kind of multi-bagger returns that you've gotten, there's no reason why you should not have that kind of love. The question is, will that love be returned by Suzlon in the near term? So what is your question? Should you book some profits? Is that what you're asking, Parth?
Yes, I want to know that should I book some profits, partial profits, because I was thinking of getting it off about 2,500 shares and so I can place it somewhere else.
Understood. So basically you want to know on the fundamentals, or is it technical view that you're seeking?
Fundamentals, I know it's getting the orders and all. I want to know the technicals about it.
Got it. Okay, got it. Vikas, it's held at around this 60 level, if I'm not mistaken, for some time. And so the question is, should you take money off the table? And you've discussed a few opportunities to deploy, but this specific question, 2,500 shares out of 5,250, would you book now and where would you put it?
We can continue to hold on because its purchase price is so mediocre, so it doesn't matter whether the stock declines by 4 or 5 rupees or from here on. And in terms of specific technicals, the Suzlon, the stock has made multiple attempts to cross the 100-day average of around and they will and again resisted and declined. But this time it seems the stock is poised for a breakout. So we believe the stock will move further higher and anything near to 64, 65 rupees, another 10 to 12% upside, we can book some amount of partial profits.
Okay, so that's the view with regards to where Suzlon is concerned. Our next question is from Umesh Parekh, who's holding 1,000 shares of Bajaj Finserv and wants to know the near-term target for us. He's a long-term investor and wants to know as to what should be the outlook for this particular counter. Saurabh, I'll come to you on this one. What's the view like?
For the long term, we can hold. I won't be able to give short-term targets.
Okay. All right. The next question is from Srinivasan, who's writing in from Pune. He's purchased Alkyl Amines 50 shares at 3050 a piece and wants a long-term perspective on this. What's the view like, Saurabh? I'll come to you again on this one.
For the Alkyl Amines, I think some kind of a turnaround is happening in the chemical sector. I would just hold. On these valuations, I think it seems that stock has been somewhat bottomed out.
Saurabh, Bajaj Finserv, he's given us a clarification, Umesh. 4812 prices before split and bonus. And so I think he's been holding since the 31st of January 2018. And so from that perspective, I don't know what the current price or acquisition price will be. But if you've been holding for so long, what should be the thinking for Bajaj Finserv?
I think long term he can hold, but if he wants to switch money, I think he can from the financials he can book. If he wants to book, he can go into the banking.
Go into the bank, and we've already discussed a few options in the banking space as well. All right, let's take the next question. And Nidhi, as always, is very kind and she's, thanking us. We should thank you, Nidhi, for tuning in. You've got a question on Jio Finance, and this is a company that has posted its numbers. 1,000 shares is what you own at a price of 220. What price should you buy more for the next 12 months or so? Holding with gains, and this is rare actually because a lot of people who've bought into this company or this stock have been disappointed, at least in the near term. The question is for you then on the charts, Vikas. Would you hold for a period of 12 months or would you add more?
So she can continue to hold for a period of few months or 1 year, what she's been looking for. But in terms of addition, it should wait some amount of decline. No doubt the stock has made a double bottom near to sub 205, 210 levels. So I'd say the stock has done pretty well. Post inclusion into the Nifty 50 last month, the stock has witnessed some amount of ETF-based buying, which has garnered further to move to higher band of 245 to 48. There is a minor resistance near to 265 levels. If that has been surpassed, the stock would be in a strong bullish momentum. So in terms of adding, she would wait for some decline near to 233 to 35 for levels.
Okay, our next query is from Dharma, who's writing in from Hyderabad, holding 80 shares of ITC at 412 a piece and wants to know the outlook for the stock as well as sector for the next 2 years and wants to know if the stock will have any impact of Trump tariff and also wants to know if he can expect 12 to 13% returns for the next 2 years on a counter like ITC. Saurabh, I'll come to you on this one. Today itself, we have significant updates coming in on ITC. It is on an acquisition spree. They've acquired 24 Mantra Organic, plus they've also further invested in Mother's Purse as well. 24 Mantra is basically an FMCG counter that they've acquired, and Mother's Purse is also into baby products. What's the view like? 12 to 13% achievable in the next 2 to 3 years?
I think it is easily achievable. In the past also, they have done some acquisition and they have been proved good for the company. If you look at all the businesses, tobacco business is growing, hotel business is doing exceptionally well, paper business, FMCG business. In the FMCG business, they are keep on adding newer products and the growth is also coming. So I think a company like ITC, it is a kind of a portfolio stock. You can easily expect good return from it.
Okay, so that's the view with regards to where ITC is concerned, and bullish is the view. I mean, Saurabh is bullish on ITC. All right, our next caller, Nursing, is calling in from Visakhapatnam. A very good morning to you, Nursing. How can we help you?
What is the position of this FX frozen food?
Okay, do you want a technical view on this or a fundamental view?
Both.
Okay.
Both. Whether we can go for hold for long further period.
Okay. All right. I'll take this up with you, Vikas, first, and then go to Saurabh, because we already, were talking about how Avanti Feeds has already taken a beating because of Trump tariffs. Apex Food is another counter which could be impacted, although their exports are not significant enough as compared to where Avanti Feeds stands. But with respect to where charts are concerned, Apex Frozen, how is it looking?
Recommend to avoid, because if you look at, there are multiple headwinds going through with respect to Trump tariff, and no doubt in terms of price performance also, maybe Avanti Feeds witnessed strong amount of move, but Apex failed to follow up action with even the same relative in the sector. So nothing great exciting in terms of chart patterns, so it's better to avoid with an even.
Avoid is a view on the technicals on Apex Frozen, and remember, this is what we said. Significant uncertainty prevailing right now in the space. PFC, REC, normally we don't take multiple stocks, but then since this is a pair that is often spoken about, we will take it. And this is Raj's question. He's bought both and he's holding. He's wondering whether to hold for a period of 5 years. The stocks are up and about in trade today. Saurabh, on the fundamentals, would you hold for 5 years? Would you add more?
I think from the perspective of 5 years, both stocks make sense to hold. I think there is going to be significant activity in the power sector, and they are the financiers, PFC at the cities level, and the REC is more into the interiors of the country. So in my opinion, I think he can hold on to both the stocks.
Okay, Jeevan is making a point. He's been posting every day and we've not been taking your question. I'm so sorry, Jeevan. It is not on purpose. I'm taking your question right now. You've got 168 shares of Canara Bank that you bought at a price of 92 rupees per share. And can you hold or sell it? What is the target that you would put on it? The stock is up and about in trade today, 99 or thereabouts, so it's above the buy price. Would you sell right now? So Vikas, on the charts, how does Canara Bank look?
You can continue to hold on, because no doubt Canara Bank was a strong outperformer in the calendar year 2024. And since the corrective action happening through, the stock has witnessed some amount of volatility, but it is poised for a higher breakout. It has witnessed multiple bottoms near to those and higher tops. So we believe the stock to do pretty well. And as the PSU banking index is poised to break out the 200-day average, Canara Bank could be a strong outperformer. So we can move higher. The target price near 205 to 207 levels over the next few weeks.
Okay, hopefully that answers your question on Canara Bank. It is time, gentlemen, to hit the rapid fire segment, and this is where, remember, we throw as many questions at you over a period of 2 minutes as we possibly can. Do answer in a short and cogent manner. The first question is on Siemens, and Vishakha from Bengaluru wants to know. She's bought at price of 5,363. This is the pre-demerger price. Would you hold, Saurabh, for a period, for a long term?
Hold.
Okay, PC Jewellers is the next counter. Naga Bhushana is holding 600 shares, bought at 17.4. What's the view like with respect to where technicals are concerned, Vikas?
We will avoid and sell it.
Sell it. Okay. Gateway Distriparks is the question. Is the stock bought at a price of 62.5, and Arsing wants to know whether to hold. Saurabh, on the fundamentals?
Hold.
Okay, Prabnoor Singh is writing in. He wants to know what should be the next course of action for something like an SBI Life Insurance. His time horizon is 2 to 3 months. So where charts are concerned, Vikas?
We can continue to add more. 1680, 1710 should be the target price.
Okay, Venkatesh wants to know about Balu Forge, which he's bought at a price of 814. He's seeking a 1-year time frame. Would you reduce, sell, or add, Vikas?
Stock has witnessed some volatility at current levels, so it's better avoiding.
Okay, NMDC is the next counter. Prasanthi from Visakhapatnam is holding 400 shares, bought at 16 rupees a piece. Should she hold, sell, or add on dip? Saurabh, what's the view like?
Hold.
HDFC AMC bought at levels of 4,000. 10 shares held. Should you book partial profit from a perspective 1 to 2 months? Rajiv wants to know. Vikas?
We continue to hold, maybe 4550, 4600 could be the target.
Okay, Arvind, as the next counter, Uma from Coimbatore wants to know what should be the short-term target for this particular counter. She's holding 500 shares at 490 a piece. Vikas?
We will see 85, 390 is a strong resistance area. If that is surpassed, then we can move ahead.
Okay, we've already... CG Power bought at a price of 91 rupees. Vishwantha wants to know, should you book profits at this point? He's holding at 91 rupees. Would you book, Vikas?
Hold.
All right. Quite the acquisition price there for CG Power. All right, gentlemen, thanks so much for joining us this morning. Always a pleasure having you on the program. All right, and viewers, I know a lot of you have asked questions and maybe have not gotten a response, but hopefully the conversation that we've had and the stocks that we've discussed have benefited you in some way. We'll be back tomorrow to take more of your questions. In the meanwhile, from Mahima and myself and the team that put this show together, thank you so much for watching and do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Hello and welcome. You're watching KYC, Know Your Company. Today we're going to be talking about NTPC, and just to kind of list down a few reasons as to why we are talking about NTPC today. First off is we're going to try and assess whether this is a pocket of safety in this time of uncertainty, and there are plenty of them, at least at a global stage, and even more so domestically. Growth seems to be coming off in that sense, and it's a roll-on impact of everything that's happening globally. So is this that pocket which is domestic facing and looking better in relative terms? So that's point number one. Point number two, valuation. Is the risk reward fair at this point? So the opportunity size may be so, but is the risk reward therefore fair from an investor perspective? So this is the first reason why NTPC. The second one is valuation. Is risk reward fair at this point? Because it's not trading at its typical valuations or long-term averages. Can NTPC deploy fresh capital at high return ratios? This is my third question, and which I'd like to have answered. The fourth one is opportunity, whether it is, so opportunity is large is absolutely fair, whether NTPC is well placed to capture that opportunity, or whether there are other players in a better space to capture the incremental market share coming out of the opportunity size. The fifth one is, what are the risks like, including the risk of execution, because if execution does not happen, Mihika, you might likely not see the kind of outperformance that we've seen over the last 5 years from the NTPC stock. So those are the 5 key factors that I'll watch out for where NTPC is concerned. Welcome, Mihika, by the way. And let's quickly start off with what NTPC does. Well, it's the largest power generator in India. It has the largest capacity for thermal power in India as well. It operates 92 power stations and has a huge capacity. 76 gigawatts is the total capacity that NTPC has. It's 17% of India's installed capacity, 25% of India's utilized capacity for FY24. So extremely large. And it's a very, very important company in that sense. If NTPC stops producing power, you'd likely see
a big demand supply gap.
6 hours of our air conditioner not functioning, and likely being that the country will come to a standstill. So something to keep in mind. The second one is with regard to how, okay, so it's 82% coal-based capacity that it currently operates, 18% renewables. This may shift, and we'll talk about this shift as well as it starts to happen and as it starts to unfold. We'll talk about how we're expecting that to happen. They have 17.6 gigawatts of thermal capacity under construction. Mind you, a lot of this has started to come on stream because of the large power demand and the deficit that we are playing at, and expected to add 5.5 gigawatts of thermal capacity over FY25 to 27 as well. So that's something to look out for on the thermal side of things. But ESG, Mihika, everyone wants to go green, so does NTPC. They're going into renewables, they're going into, they already do hydro in a big way, but they also want to go nuclear. So talk to us about that.
So, you know, their focus on thermal is going to stay, because as we know that we're going to need that round-the-clock energy as we transition to renewables. But the priority for future growth is renewables. They're targeting 60 gigawatts of renewable capacity by 2032. This compares to 3.5 gigawatts on a consolidated group level as of FY24. Majority of this capacity will be built and deployed separately by NTPC Green, which is also its listed subsidiary, and they have 10.3 gigawatts of renewable projects currently under construction. But this, apart from thermal and your renewables, they have other multiple growth levers. Up first, they have coal mining. They have 8 captive coal blocks, means just owned by the group. 2 of them are currently under development, but these 8 blocks combined have an estimated mining capacity of 86 million tons per annum. The next part is pumped and battery storage. We've recently seen battery storage being mandated in upcoming tenders by the government itself. They're targeting 8 gigawatts of pumped storage capacity by FY30 and beyond, and the subsidy has also issued battery storage tenders of 2 gigawatts of capacity. And lastly is nuclear storage. Now they're exploring building small modular reactors. A concrete announcement is expected in 6 months or so, and they started work on 2.6 gigawatts of nuclear plants. And it's key to note that NTPC has actually a JV with one of India's premier, nuclear capacity builders, and they already have a step in the door. But Harsh, let's talk about the KYC ratings.
Yeah, so first off, let's try and break down as to what are the metrics that we look for where an NTPC is concerned. We'll start off with an income statement, then we look at the balance sheet, we look at cash flows, we look at key ratios, and we look at capacity additions as well, because that's going to hold the key. So maybe capacity additions and how that plays out, because one is what they've done in the past, and second is what to expect in terms of capacity additions, which will impact the revenue going forward as well. We look at key ratios, shareholding, street cred and street coverage, along with valuations. So we look at all of that and give you a quick summary on how we rate this company, and thereafter taken a view from Nikhil Nigania of Bernstein with regard to NTPC and with regard to some of the questions that we posed at the start of the show. Let's start off immediately with the income statement. Now, in terms of the growth itself, it's been fairly healthy. You're looking at FY22 numbers, which were roughly at 1.32 lakh crore in terms of top line. It's done that in the 9-month FY25 period. So the growth over the 3-year period has been fairly healthy, 17%. YOY, it's been slightly more tepid, 6%. But if you're looking at margins YOY, they've inched up a wee bit. While it's flat largely, but inched up a slight bit. 3-year margins have actually come off, and that's because of raw material costs and raw material power costs going up. So some energy related costs have gone up, including costs for coal and fuel, and due to which you are seeing the kind of impact on PAT versus the growth that we are seeing on revenue, which is 17%, but PAT is just about a 12% growth. So we're going to give this a neutral, because what we want to see is a translation of mid to high teens growth on top line to translate to the bottom line. That's not exactly happened, and that's something we're looking for. So we're going to do or give this a neutral. But what's the outlook with regard to capacity? Because that will give us more perspective on how this top line number as well as bottom line number will evolve. Mika, talk to us about that aspect of things. How, what's capacity adding up to?
Yeah. So first, let me just give a short synopsis on how it's grown historically over the last 3 or 4 financial years. Group capacity has grown 14% to around 76 gigawatts currently versus 60 gigawatts that we saw in FY21. And now total capacity of over 76 gigawatts is what we're seeing on a group or consolidated level for an NTPC. And they have 30 gigawatts of capacity under construction. This is across thermal, renewables, hydro, all of these counters. Now, the group has 17.6 gigawatts of thermal capacity under construction, and this is expected to be completed in around by FY31-32. And what thermal capacity getting executed does is increases regulated equity, which has guaranteed returns for the companies. Currently, all their coal-based capacities are under the regulated equity model. It's expected to add 5.7 gigawatts of thermal capacity over FY25 to 27 itself. And in the renewable space, like I mentioned, 10.3 gigawatts of renewable energy projects are currently under construction. So the pipeline, whether it's their core business of thermal as well as renewables, which is where they're pegging their next level of growth coming in. It's a healthy pipeline, and it's a thumbs up on this run, considering historically they've grown their capacity at a good pace, and they have specific targets and a good pipeline to execute in the next over the medium term.
Very interesting. So that's on capacity. Let's look at the balance sheet now, because it's a PSU and therefore picks up funds from debt markets at extremely low levels. Your equity share capital again is decentish in terms of size. Mind you, this is a very, very large company. And just for perspective, I want to quickly pull out the equity share capital plus the reserves. That adds up roughly to around 1.7 lakh crore at the end of September of 2024. Of course, we don't have the full year FY25 number, but H1 FY24. So both equity plus reserves is roughly 1.7 lakh crore, but the debt, as you can see on your screen, is 2.4 lakh crore. So the borrowing number is extremely high. It's roughly paid out 13,000 crore in terms of interest payments in the last year or so, and therefore it funds its debt at extremely low cost of debt, which is again a key positive. It gets a sovereign rating because it's 51% owned by the government of India and therefore enjoys that, and its cost of borrowing is maybe 1% or 2% lower than most other players in the industry. For example, a JSW Energy who I spoke with just about today, or rather on Saturday, came out and told us that 8.8% is what they are funding their debt at. So This one is at a reasonably lower level to that, clearly. And that's the one big advantage that it has. But yet, the balance sheet size is very, very large, and the debt number is extremely large as well. And therefore, we'll give this a neutral. Risk is low, of course, of the debt on that balance sheet, but nonetheless, something to be mindful about. Cash flow, Nika.
So what they've been investing so far and adding, it is translating into a good set of, cash flow. Now, if you look at the cash flow from operations, FY22 to FY24, we actually did see a slight moderation. But H1 FY25, which is what are the latest values that we have available, 67% of the cash flows from operations that they saw in FY24 has already been reached. And in terms of their net cash flow is where you've actually seen the turnaround. FY22, you had a negative balance of 274 crores. This kind of contracted to 210 crores in FY23. FY24 is when they went net cash flow positive at 398, and in H1 FY25 the net cash flow number stands over 1,200 crores, which is 3 times than what we saw as a whole in FY24 as a fiscal. So it's a thumbs up on cash flows. Whatever they've been investing has been, fruitful for them, and we've seen the net cash flow number, which actually was negative 2-3 fiscals ago, turn positive and seen a triple growth in the first half of FY25 itself. So it's a thumbs up on the cash flows, Harsh.
Thumbs up on the cash flows. Okay, let's look at return ratios therefore, because once you have this kind of cash flow coming in, and the net cash flow number may not be the right metric to look at, Mihika, here, because they're reinvesting a large part of their surplus. There's a power deficit in the country. They're pushing and trying to take advantage of that. And therefore, your net cash flow from operations could well be a minor negative or a very slight positive compared to the cash inflows from operations that are coming through. But the point, therefore, is return ratios aligning up. And what we're seeing is they're just about able to make early teens kind of return on equity. And therefore, is this a lucrative enough business is really the question. The other part also is the fact that traditionally this has always been the kind of range that they've operated in. So it's not, you don't expect a very large increase in this number.
That's true.
Also, a lot of the returns are pegged or are premeditated to a large extent, because you already have power purchase agreements which are locked in for 15, 20, 25 years, which kind of guarantee you cash flow, but at the same time lock in your return ratios as well. So the return on the regulated equity, which is generally the metric on which a power purchase agreement is signed and is decided upon, is largely 18 to 19%. So you will likely continue to see these kind of ratios last, especially in a high capex cycle, which we're just about entering, right, Mihika? Is that the right way to look at it? The other piece I wanted to explain is this regulated equity, this return on regulated equity. Wanted to take a minute to explain that concept.
Yeah. So regulated equity is basically something that is decided by the regulatory boards in the space. For NTPC, it ranges between 18 to 19%, and this is a guaranteed return on the equity capital base of the company. Now, usually when NTPC is setting up a certain project, they're not going to fund it entirely by equity. Obviously, they have a debt portion. We've seen that in terms of high debt, but it typically refers to the portion of a utility or other any regulated entity's capital structure that is considered equity, and for the purpose of regulatory procedures, and it kind of gives some kind of predictability in terms of the revenue and profitability in how you can determine it for something like an NTPC. And more capacity they add, which is under the regulated equity model, the more their regulated equity kind of grows over the next few years. So capacity additions for the company's regulated equity to grow, and thereby your returns on equity to grow, is very important for something like an NTPC.
Fair point. And shareholding, Nika.
So it is a PSU. We have the Government of India steady shareholding, 51.1% ever since March 22 till December 24. We have seen DII's kind of their shareholding in the company fall from 45% in March 22 to 26.76%. But this is on behalf of FIIs actually being more interested. We had no shareholding or any kind of stake in NTPC from the FIIs in March 2022. This stands at over 18% as of December 2024, and minimal retail interest. just about 4%, but we've even seen a slight uptick in that as well. So it's a thumbs up on a shareholding. You have government backing, DI as well as FI interest, little low retail interest, but you have exposure via mutual funds, etc. from your institutions.
Yeah, fully agree. I want to quickly highlight a few large shareholders here, Mika. So one, Life Insurance Corporation was a very large shareholder, a 10% shareholder in fact, in NTPC. Currently holds 4%. So we've seen a dilution from an LIC who is adding. There's a government of Singapore, very interesting, has hiked stake consistently over the last couple of quarters at least. So we've seen its stake go to 2.4% within that FII basket. So again, interesting here as to the fact that who some of the FIIs are and what are the DIs also doing. So some moves happening on that count. Let's look at street cred and street coverage jointly. One, the 1 year performance hasn't been outstanding. The 5 year gains though have been really good. So we've seen a 281% return that the stock has given. It's been a multi-bagger over the 5 year period. In terms of valuations, currently at around 16.94 versus 5 year historical of 16.6. And I'm talking about price to earnings. Whether that's the right metric or whether price to book is the right metric. And in comparison to its peers, the price to book number is at a substantial discount. And hence, you'll see a lot of analysts super bullish on this. Price to book is likely the better factor to look at it from a valuation standpoint. So street cred is largely a neutral. Valuations, we'll give it a thumbs down for the moment, but we'll get better perspective on how exactly should you try to, or how is the analyst community looking at this? The P ratio currently is at the highest seen in the last 7 fiscals, and that's where we're not getting enough comfort. Also, the dividend yield is just 2% when historically it's been higher. Cash flows are being churned back into the business. So some of those factors also playing out. But let's look at the cumulative rating on this one, and we'll summarize it very, very quickly for you on the screen. There you go. That's how it all stacks up. Income statement, capacity additions are going to be solid. Expect that to continue to come through. Balance sheet neutral, cash flow is positive given the fact that operationally we've been doing well. Return ratios is a neutral. Shareholding is a positive given there's enough comfort. Government holding 51 and DI FI holding is quite healthy. Street cred and valuations. That's how it's really stacking up. Let me quickly bring on board Nikhil Nigania, director at Bernstein, to talk to us about his views with regard to an NTPC. Welcome, Nikhil. I want to quickly, first off, try and understand straight up from you. This is a sector where the tailwind is extremely strong. Is NTPC well placed to capture the tailwind? It's been a very strong player in the space. Can it continue to do so, or are smaller players eating into its share?
Fair question. So NTPC has been one of our top picks in the sector for the last almost 2 years or so. So if you look at from a tailwind perspective, what are the tailwinds which are happening in the sector? One is power demand growth, while FY25 was a bit slow at 5% growth. Before that, 3 years power demand grew at 8-9% CAGR. Going forward as well, we expect 1x real GDP, which is about 6-7% growth in power demand, which is higher than historical, what we had in the last 2 decades. The second more important theme which benefits NTPC is the evening power shortage. So what is happening in India is we have enough power when the sun is out, but in the non-solar hours of the day, which is after 6 p.m. or even early mornings in winters, is when we have a power shortage. Now, to solve for evening power shortage, the obvious answer is a thermal plant. And NTPC is the biggest player in the thermal sector in India. The private sector was hesitant to add new thermal plants, and hence NTPC took a big lead in that. So the need for thermal capacity, which was effectively written off a few years back, is where NTPC stands to gain from the tailwinds. And to the question, so NTPC recently announced their plans to do 30 gigawatts of incremental thermal capacity by 2032, which is a substantial number on a current total base of about 75-80 gigawatts of generation capacity that they have. So one is thermal story. Second, interestingly, is the renewable story. So as government pushes to add a lot of renewable capacity with an aspiration to reach 500 gigawatts of renewables by 2030, up from 220 today, NTPC we think will play a big role in that as well, even in the renewable story. Why do we say that? A simple cost of debt advantage, which you were alluding to earlier as well. They can borrow money much cheaper than peers. And in a renewable business, which typically 75-80% debt funded, that can be a huge advantage for a player. So these two reasons primarily, the need for more thermal plants and the advantage NTPC has on the renewable side, is why we think NTPC continues to be a good player to own in the space.
Nikhil, you mentioned a lot of, thermal as well as your renewables, kind of, how NTPC gains from both of these stories. They have a lot of capacity, under construction, but execution is very key, whether it's in terms of your regulated equity getting higher. How do you expect their, consolidated capacity to grow in the next 3-4 years? Will execution be on time?
No, that's a fair concern. So the only concern we have to our thesis is execution. So thermal, there has been delays in plant commissioning, though quite a few of their plants are very close to commissioning, which should get done in FY26. And even a worrying trend has been renewables. So renewable also, they guided 3 gigawatts of renewable capacity addition in FY25, but we think they haven't even achieved half of that. So it's not just them. Most players have struggled to add renewable capacity against their guidance. But even for NTPC, execution has been slower than envisaged by us and the street, both on thermal and renewable. So going forward, thermal should improve. As I said, close to commissioning assets are there. Renewable also should get better, but again, their issues of land, issues of transmission could keep execution below their initial guidance.
Okay, and how should one look at return ratios therefore, Nikhil? It's a space which has been in focus because there are prolonged power shortages in India and has been the case over the last couple of years. We're expecting that shortage to continue as well. Shouldn't return ratios improve in such environments?
See, what happens in the power sector is in a power shortage situation, the ROE, the return on equity of NTPC doesn't change, right? Most of their assets are regulated return assets.
Correct.
So they really don't get an upswing in the ROE due to a power shortage. The benefit they see is in the incremental capacity addition, which is why the capacity pipeline has expanded, growth has expanded, and the multiples have re-rated. Companies which gain in a power shortage situation immediately are companies which are merchant power capacity, untied thermal capacity. So those are the players which gain more. So NTPC benefits on the long term, not immediately in the near term. So the ROE of NTPC in our forecast continues to stay around 13%, which is their existing ROE, which they report at a company level. So it's not a ROE change which has happened. It's a growth inflection which has happened in NTPC over the last 2 years. And that to a long-term growth inflection, not really a near-term growth inflection, why the stock is related.
Got it. So it's a long-term growth story in terms of how, the capacity adds up. I also want to bring the nuclear power angle in it. We've seen the company kind of show interest in the small modular space. They have kind of exposure via the JV Ashwini. How do you feel this, story playing out, considering that we have a target and India aims to, kind of bump up its nuclear power capacity?
Yeah, so nuclear is the new focus from the government side. Again, the reason for focus on nuclear is the same challenge I highlighted earlier, which is how do we get power in the non-solar hours a day? Other than thermal, one answer is nuclear. That's why the push towards nuclear. So nuclear, we admire the aspiration government has, and without a doubt, NTPC will play a key role. Till now, all the nuclear power plants in India were built by Nuclear Power Corporation. Going forward, apart from NPCIL, NTPC has also formed a joint venture with NPCIL to add nuclear power plants. So there also NTPC will gain, but again, the first nuclear power plant by NTPC will possibly come by 2032 at best, not before that. So it's a long-term story, not something which impacts the near-term earning. It's more a long-term growth inflection, which nuclear would add. And on nuclear also, while it's a right ambition to have by the government, the challenge is execution. To build a nuclear plant in India, it takes 10 years or even higher for a greenfield plant. If you look at the Gorakhpur nuclear power plant we are building, it's a greenfield capacity. Construction started in 2018 and is expected to get commissioned in 2032. That is if we don't see further delays from here. So that's the kind of timeline we're talking about. So again, not a near-term story, but more a long-term growth impact on NTPC per se from nuclear side. And SMRs, again, we have our challenges. We have reservations as well. Globally, companies have taken a long time even China took more than 10 years, and they are still not commissioned their SMR, which they are building. So it's again a long cycle. SMRs are a long-term solution to power beyond 2035 possibly, not before that.
Point taken. Nikhil, I'm going to wrap two questions into one because we're out of time, and I'd request you to be as brief as possible. One, how do you view valuations, therefore, for an NTPC? Of course, it's a PSU. There's some execution risk in any case, as is the case in most other PSUs as well, but more so in the power sector. That's point number one. Point number two, return ratios, should we expect that to be around the early teens or just about double digit? Is that the prolonged expectation as well, or can we expect a bit of a re-rating there as well?
Yeah, sure. So second question, let me answer first. So the ROEs, sure. I don't think will go significantly above 13%.
Okay.
See, renewable, which is again a big part of the growth. In renewable business, you don't make phenomenal returns. The returns are early to mid-teens at best. So ROEs we expect to stay around 13% in the long term. On the first question on valuation, so the domestic market tends to look at NTPC on a price-to-book basis. Is currently at about 2x price to book, last filed. The private sector peers, if you see, are 3.5, even 4x price to book. So it trades at a discount to private sector players. Globally, utilities on price to book are around 2x. So it's not expensive even from a global standpoint. It's in line with global peers. And earnings multiple or EV/EBITDA is in fact at a discount to global peers. On EV/EBITDA, it is 9.5 times. Globally, utilities are at 10.5 times. So NTPC seems, fairly priced. It's not expensive as per us. And to play the power sector, we prefer an NTPC over the private sector peers it has, due to this low valuation, due to the cost to debt advantage and so on.
All right, Nikhil, it's been comprehensive and it's been interesting. So thank you for coming in and speaking with us. Great getting your views and thoughts on this to try and, unpack this a little bit more. So thanks for that. But, frankly, out of time on this one. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Hope this has been helpful. NTPC is what we've tried to deal with today. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm your host Malika Mishra. Let's take a look at how the markets are currently doing. The Nifty 50 and the Sensex are both above 1% high, largely led by gains in the banking space. The Nifty 50, as you can see on your screen, has in fact surpassed the 24,000 mark, while the 30-pack Sensex is hovering around 79,300-400 levels now. The Nifty Bank is outperforming the benchmark indices with all components in the green. The broader markets seem to be in a better place as well, as the Nifty Mid Cap 150 and the Nifty Small Cap 250 are above 1.5% high as well. Now, speaking of the top contributors to the Nifty 50 basket, you would see Reliance, HDFC Bank, Axis Bank, Infosys and SBI are the top contributors and gaining in trade today. While on the losing side, you'd see ITC, Bharti, HUL, Adani Ports and HDFC Life. So quite a bit of FMCG counters that are dragging the market. Now, HDFC Bank, ICICI Bank and Yes Bank, if we can pull up those counters, you'd see all of them are doing well on the back of strong set of results that came in this weekend. And as a consequence of that, we're seeing a lot of optimism in banking space. If we pull up the Nifty 50 heat map, you would see a fat majority of the stocks trading in the green with, as I mentioned, just a few FMCG counters like Nestle, Title, HUL, ITC all dragging behind. Now, the sectoral heat map represents a similar picture as well, with just the FMCG index down, with all other counters gaining. In fact, PSU Bank, energy, defense, oil and gas, metals are leading the pack. The market breadth currently is highly skewed in favor of advances, with less than a quarter of stocks declining. To give you specific numbers, 1,903 stocks as of now are advancing in trade, with just about 432 stocks declining. Now, moving on with the first story, speaking of markets, in fact, Nomura has come up with an interesting note on its strategy on India. They have set a target close to 25,000 for March 2026. And my colleague Gail is joining us to tell us what their topics are, what is their view on tariffs, and what are they most cautious on.
So it's an interesting day when Nomura has released their strategy report, where you have Nifty 50, which has already hit a 24,100 mark in trade. So if you see in terms of their 2026 target, that's March 2026, they are at 24,970, and this they are factoring a 5% cut in terms of the current consensus estimates, which already are on the downward side. Now, they're expecting the FI flows to be supportive. In fact, last week itself, FIs have been buyers, and that is what is supporting the Indian markets. Overall, in terms of the return, -9% to a +7% is what they are looking at in the next 1 year. Now, let's look at the impact in terms of trade tariffs that Nomura is looking at. Firstly, what they are indicating is that India is better prepared as compared to rest of the world when you talk about the supply chain reallocation that could be happening. So we are at an advantage position. Secondly, the fall in terms of commodity prices as well as in terms of oil prices, these are the two factors that will that will actually benefit India's macro strategy as well. Now, talking about their strategy in terms of earnings, they're seeing downside risks to the current consensus growth and earnings estimates. However, the valuation will find support, and what will give them support is the drop in bond yields. Moving from there on, what is it in terms of their preference? Where are they positive on? Now, Nomura is preferring domestic sectors versus the export-oriented sectors. They're looking at a bottoms-up approach in terms of their investment thesis, and they're saying that we should be avoiding stocks with a high valuation multiple. So the valuations are absolutely key as well on this front. They're positive on financials, relatively low earnings risk, and the present valuation in terms of financials is what is supportive. Consumer staples, Discretionary, oil and gas, telecom, power, internet, real estate, and a few domestic healthcare plays are what Nomura is positive on. Now let's understand what they're cautious on. Export-oriented sectors is their cautious list. Capex themes are a cautious play. IT, industrials, cement and metals is somewhere where Nomura is cautious on. In terms of pharma, what they're saying is that they're expecting the tariff impact that will be passed on, and any correction in terms of pharma names should be used as an opportunity to buy in terms of the sector. Let's look at their picks in terms of the large cap space. So it's Axis Bank, ICICI, SBI, Bajaj Finance. These are a few of the names that they're looking at. Apart from that, GCPL, L&T, CG Power, RIL, Tata Power, you can see the names that are flashing on your screens as well, which are their topics in the large cap space. Talking about small and mid cap, it's Federal Bank, Marico, Dixon, Uno Minda, GE Vernova TND, MedPlus, Lupin, et al. So a lot of picks that Nomura has picked up. But clear strategy is domestic-oriented sectors, cautious with regards to export-oriented sectors, and a 24,970 being a target price, which also takes into consideration the earnings estimate cuts that we're already seeing.
Right, Hetal. Thank you for wrapping up that so beautifully. Now, Zomato, that goes by the name of Eternal on the stock exchanges, is one counter in focus as well. And there are two reasons behind the buzz that we're seeing in this stock. Let's look at the first one first. In a significant move, the board has approved a FII ownership cap of 49.5%. Now, to tell us what this means for the company, my colleague Mahima is joining us with an analysis.
There are two things here. As you rightly mentioned, the board has approved an FII ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led, and this will likely gain focus post the FII overall holding is trimmed. Now, in terms of what has happened so far where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DIA funds, and post the QIP, FII ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% earlier. Currently, DI ownership stands at around 23.5% and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is eternal.
Right, Mahima. Well, on the lob side of this cap on FII ownership, the company could also see some of the outflows from FTSE and MSI, and my colleague Somit is here to give us the key figures of that outflow.
Fundamentally, it seems like a strong plan for Eternal going forward. But yes, because of this FI limit cap that the company is looking to put, there could be massive MSCI and FTSE passive selling that we could see. Not today, over a period of quarters, but yes, this is expected to come given the fact that there would be a cap on the FI limit, and there could be outflows of nearly $1.4 billion when it comes to Eternal. Now, why this selling is expected in Eternal, which is earlier known as Zomato, because if you look at the difference between the proposed FI limit cap, that is 49.5%, and the current FI holding in Zomato is around 44.88%, which means that the headroom between the proposed cap and the current holding is less than 10%, and whenever there's the headroom is less than 10%, the weightage of Zomato or Eternal in the MSCI and FTSE index will come down, and because of this we could see this passive selling when it comes to the MSCI and the FTSE index. Now, for for MSCI, the current weightage of Zomato is around 1.33%, and this could halve, which could lead to an outflow of close to 600 to 800 million US dollars after the review, and this review might happen in May 2025 or in August 2025. So for when it comes to MSCI limited outflow, there is around 600 to 800 million US dollars of outflow expected. But when it comes to FTSE, the current weightage stands at around 1.17%, and whenever the headroom comes below 10%, it leads to deletion of a stock from the index, which means that Eternal will move out of the FTSE index, which could lead to an outflow of anywhere between 500 to 600 million US dollars after the first review happens, and the first review is expected to happen in June 2025. After that, every quarter, whenever the headroom is less than 10%, there could be outflows. So over a period of 4 or 5 quarters, there could be outflows of anywhere between 70 to 100 million US dollars for Zomato. So there would be the overall outflow of close to 1.4 billion US dollars when it comes to Zomato, because the headroom of FII limit is coming below 10% post the proposed cap of 49.5%.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and with me is Prashant Kumar, the Managing Director and CEO at Yes Bank. After their Q4 numbers, it's been a decentish set with regard to Q4, sir. What I want to understand firstly is this NIM improvement of 10 basis points. One, the sustainability of that given the rate cuts which have happened and which are anticipated, right? You have a large floating book. So perspective on that, what we should expect maybe in the next 2 quarters as well as in the next 4. And you've suggested, point number 2, that in the next 4 quarters or so, you're expecting margins to actually improve. So what are the levers which are giving you that feel?
So I think you are rightly saying, actually, in terms of not only 50 basis point cut has happened, there is also more expectation in terms of some more cuts in the current financial year. But I think why we are confident in terms of not only sustainability of these margins, which has gone up by 10 basis points, but improvement in the coming quarter because of a couple of things. And the one part in terms of the deposits which we have kept in the RIDF, which was of a very low yield. Now there has been no shortfall in FY24 and FY25. It means there would not be any demand, and whatever is there in RIDF would start coming back. So we are expecting that currently 8.7% of our assets, which are sitting in RIDF, would come down to below 5% in the next 2 financial years. That is point number 1. The point number 2 is about cost of deposit. Despite headwinds, if you see, like, we have been able to contain our cost of deposit. It means when it was very tough war for the deposits, everybody was increasing, but our cost of deposit has remained intact around 6 to 6.10%. And that is mainly because of higher growth in our CASA. If you see our deposit growth, the published figure is 6.8%, but that's a year-end phenomenon. Actually, average deposits have grown by 16%, and the current account was more than 20%, and savings bank was around 32%. We have already taken a decision to reduce rate of interest on the saving bank as well as on the fixed deposit. If there will be further cuts, we have a lot of room available for reducing our cost of deposit further. That is point number 2. The point number 3 in terms of the high yielding assets on the retail side. So there was a very calibrated call to contain the growth on the retail side in the FY25. But if you see the Q4, we have started growing on the retail side because we have strengthened ourselves both in terms of risk underwriting as well as on the collection. And in the coming financial year, we would be seeing the retail growth of also around 10 to 12%. So I think these 3 combinations gives us a confidence that we will be in a position to improve our margins quarter after quarter.
Point taken, sir. So on the deposit front, you've reduced interest rates significantly on SA specifically. It's is this an indication that we're completely out of the woods in terms of the deposit war which was playing out between banks? That is point number one again. Point number two, are you therefore very, very comfortable that the customers that you've onboarded with the higher interest rates that you were offering are now going to stay back with you? Is that the kind of comfort you have?
So we are quite confident that not only we would be able to maintain those deposits, but we would continue to grow. For a very, very long time, I am saying, ultimately, when you are able to get the deposit, it's not always because of the pricing. It also depends on the quality of service which you provide, and also the convenience you provide to your customer through the digital means. So I think both in terms of convenience to customers through their personalized apps, and also the quality of service, we are quite confident that we would be able to grow deposits despite reduction in the rate of interest.
Okay. And so therefore, what is the scope for margin expansion? Say 4 quarters down, once everything gets repriced, what's the scope and what's the quantum? Is it going to be 2.7? Is that going to be the new normal? Is 2.9 going to be the new normal? Where should we look at margins?
I think this is a journey. This is a journey for us, but definitely our aim is in terms of going beyond 3% margins in the next 2 financial. But that would be a very progressive journey, and you must have seen we have never made any haste kind of decisions, but continuously it's on an improvement.
No, sir. Credit where credit is due. And the other place where credit is due is the OPEX. You've guided and you've largely been able to control OPEX significantly well. When I'm looking at the sequential number as well, that dip in OPEX from 70 plus to around 67% is surely standing out. What I want to understand therefore, sir, is where does OPEX go from here? And how quickly are you going to be able to bring it down? Because certainly a 4 percentage point absolute number sequentially is slightly unrealistic. So where should we see OPEX, say, end of year FY26 and end of year FY27?
No, I think we would continue to have that control on the OPEX. And our strategy in terms of reducing our cost to income, which has come down to 67% in Q4, to bring down to the lower end of the 60s. And that would be a function of both increasing the income as well as a very tight control of the cost. So the way we are forwarding, the way we are seeing the opportunities, we are very confident that we will be in a position to achieve that.
Well, let us move on to another stock which is buzzing in today's trade. Divi's Lab has announced a long-term manufacturing and supply deal with a global pharmaceutical company, and my colleague Varsha is joining us with more details of this deal.
Thank you for that. So yes, Divi's has announced a long-term supply deal with one of the global pharmaceutical companies, though the name has not mentioned because of the confidentiality. But the company will supply advanced intermediates to the company. Now, please note that advanced intermediate is used to make API, that is the main salt active pharmaceutical ingredient. Now, if I were to talk about the scope and impact of this, this is expected to contribute meaningfully in Divi's custom synthesis segment. Now, partner's name and specific details are not mentioned, and for this Divi has planned in capacity, or rather capex, of 650 to 700 crore in capacity expansion, and the expansion will be at existing manufacturing facilities, and the investment will be funded through internal accruals. We all know that Divi's has almost 3,500 rupees crore of cash sitting on their balance sheet. While this agreement ensures assured supply for the customer and allows Divi's Lab to expand its custom synthesis business, which contributes almost 53% to its total revenue. So, a thumbs up on the agreement that Divi's has signed.
Well, thank you so much for that, Varsha. And now another buzzer in focus today is Kansai Nerolac. It is making some smart moves. The company, in fact, has targeted a 9% compound annual growth rate in sales over the next 3 years. It has also announced a target of 14 to 15% EBITDA margin over the next 3 years. And my colleague Mahima is here to join to tell us what's exactly driving Kansai Nerolac at the moment.
Right. So basically what has happened is Kansai Nerolac Japan had hosted an analyst meeting where they discussed strategic moves for India business, where they have guided that for the next 3 years the sales CAGR that they want to achieve is 9% and the EBITDA margin that they are aiming at is 14 to 15%, and from a longer term perspective they are expecting EBITDA margins to reach around 18% by FY30. Now growth over the next 3 years will be led by the industrial segment. Focus of course will be on defending the decorative market share as well in the primary and key markets. In terms of decorative segment recovery, they are expecting that to happen in the second half of next financial year. India to be growth engine for Kansai Nerolac Japan, and they target the industrial margin that has already moved closer to decorative margin to be overall margins at 18% by FY30. In terms of acquisitions, they've also said that they will go on and do bolt-on acquisitions with regards to the industrial segment overall. With regards to this, there was a Macquarie note that has come out, and they've maintained a neutral with a target price of 255. What Macquarie believes is that they're liking the overall focus on premiumization and the confidence that the management has showed in terms of margin expansion, but overall they believe that impact on profitability might take place because of Grasim's entry in the paint segment, which makes overall them a little cautious for Kansai Nerolac. So this is the overall view of what has happened with the company and the updates with respect to the call takeaways from the Japan analyst meet.
Right. So overall, a good picture for Kansai Nerolac Mahima, but stay back. Now, we cannot not speak about Asian Paints if we're talking about this space, right? And although the stock is trading almost flat today and has failed to move in tandem with benchmarks, it in fact has lost over 20% in the last 6 months. What is exactly not working for this paint giant as opposed to Kansai Nerolac that you highlighted just a few moments ago?
Right. So the question really here is that whether Asian Paints charm that it had earlier and the color that it is always had is actually fading away or not. The stock has seen a significant downtick in trade in the past few months. It's down by about 20% in the last 6 months. Now, what's not working? Well, a couple of factors that are not working in favor of the company. Firstly, negative revenue, PAT as well as value growth is taking place in the past few quarters. There's low single-digit volume growth that the company has witnessed overall. In terms of margins, they are under pressure, and this is on the back of inflationary pressure as well as demand being negligible for now in the past few quarters. Then we also have international profits which are on a declining trend. There is deteriorating cash conversion cycle that is also taking place, and the FI stake overall is seeing a downtick. It's on a downhill. In terms of promoter pledge, that is also increasing. We've seen a promoter pledge increase in the last quarter itself. Let's take a look at each of these factors in a detailed manner. Firstly, negative revenue and PAT growth. FY25 there was a revenue uptick of 35% versus that of 9 months FY25 there was a revenue downtick of 5%, and PAT which was around 36% up in FY23 is down by about 30% in 9 months FY25, and this is again on the back of inflationary pressure as well as no demand, negligible demand for the paint space. Next, we have the volume growth and value growth picture, where FY22 we saw a volume growth of 31% and a value growth of 36%, which has come down to 3% for volume growth in 9 months FY25 and a negative 4.8% in value growth as well. So inflation is rising, but at the same time management is not being able to catch up in terms of price growth as well, because competition is hitting them hard. In terms of the next parameter, well, what's hurting the growth? There is sustained slowness overall in urban centers, and Asian Paints is the counter which has more concentration in the tier 1 and tier 2 cities. That is why it is seeing more pressure as compared to other paint players. In terms of competition, of course, Birla Opus is playing its role in terms of competition, slightly taking away market share from paint players, and Asian Paints also seeing that impact. The next reason is that there is downtrading that is affecting the overall value delivery as well, and there is slowdown in government spending which is also impacting the overall industrial paint segment. And lastly, seasonality has played its role. Monsoons were extended, and because of which paint sector overall has seen an impact. Now in terms of the next counter, what's causing the pressure in terms of margin? price hikes are not matching the inflation, as I mentioned earlier as well. And overall, the price hike that was taken in first half of FY25 stood at 12% versus that of inflation of around 3.3%. So margins under pressure because of inflation itself. Now, in terms of the margin trend, 9 months FY25 stood at around 17.9%. The management has always said that the guided range of margin will be around 18 to 20%, but 9 months FY25 is at the lower end of what they have guided, which has been around 23% as well in FY24. Next, the international profit business is also declining, and there's declining growth of 19% seen in 9 months FY25 as well. Next factor is deteriorating cash conversion cycle, where we've seen that the cash conversion cycle overall has reduced, and that is also taking a toll on overall Asian Paints balance sheet as well. Now, in terms of FI reducing its stake, December 2021, FIs were holding 20.38% stake in the counter, which has come down to 13.6% in December 2024. So, FIs are also losing hope for this particular counter. In terms of what's the promoter pledge? Well, promoter pledge has gone up to 9.2% in December 24, and this has happened in the December 24 quarter itself, which was around 6.58% in December 23 and around 7.64% in December 21. Overall, in terms of valuation, well, despite all the challenges, are valuations still attractive is the question. FY21, the valuation stood at 77 times, which went to around 97 times. It's come down to 43 times. But so far, the management commentary coming in also does not look very promising. So the question really here is, if the valuations have come down to 43 times, despite the stock seeing a significant pressure, is this the right time to enter Asian Paints or not? In terms of how the stock performance has been, we've talked about it, 20% down 6 months, and its stock is also trading below its 200 daily moving average. Brokerages are also cutting their target prices in terms of what analyst recommendations suggest. Right now, there are 9 buys, 11 sells, and 19 holds for the counter. So this is the overall view as to what is happening with Asian Paints and whether one should invest in it or not.
Thank you for putting that into great perspective. Well, viewers, that's all the time we have on the show, but do stay tuned to NDTV Profit for more news and updates.
That's huge. That is a biggie. It's out of it.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had in fact had to take a price hike post the Delhi election, because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
A stellar start for the week as Nifty tops 24,000 mark for the first time since the 6th of January. Trades above 1% along with the Sensex. Infosys, HDFC Bank top contributors to today's gains.
Nifty Bank hits a record high, crosses 55,000 mark, fueled by HDFC Bank as well as ICICI Bank's rally post quarter 4 earnings.
And Gail shares surge 5% as CLSA expects tariff hike by June. This comes after the Petroleum Regulatory Authority released a consultation paper proposing a review of natural gas pipeline tariffs.
Zomato in focus today after its board approves a FII ownership cap of 49.5%. Inventory-led model likely to gain focus.
And IT Minister Ashwini Vaishnaw welcomes US Vice President J.D. Vance as he arrives in Delhi with his family for a 4-day visit to India. A trade agreement and bilateral relations between both the countries remain on the agenda. Hello and welcome to NDTV Profit. You're watching Profit Buzzers. A very good morning to all the viewers. I'm Hiral Dadia and with me is Puneet Javeri. Puneet, good afternoon and a good day of trade is what we are seeing after the extended weekend. And interesting moves, a lot of factors that are working in our favor as well. Let's quickly look at what's happening. Clearly, the 24,000 mark is what Nifty 50 has reclaimed. Sensex has crossed that 79,000 mark as well. In fact, 24,000 is what we've achieved for the first time since the 6th of January, I beg your pardon, 2025, and we're trading at the day's highest levels. Overall, now it's the banking stocks which are leading the rally in today's sessions. If you pull up Bank Nifty, the PSU Bank Index, as well as the financials, you'll see the kind of gains that are coming in on all of these three sectors as well. Apart from that, if you see in terms of FIs, they have been on a buying spree. FIs have pumped nearly close to 8,500 odd crores last week, and this is week ended 18th of April. So that's the number that has come in. Though one of the sessions there was selling worth almost 2,500 odd crores as well. Other factors which are working out is the India-US trade pact, which is a positive. Outcomes are expected soon from there as well. A lot of sectors that could be beneficiaries out of that. And you have the rupee, which is gaining against the dollar. So these are the few factors which are supporting the Indian markets. But let's quickly look at the sectoral heat map as well and see which are the sectors which are bucking the trend and which are the ones which are losing. So you have IT, PSU banks, real estate, as well as the private bank index, which are on the front footing. FMCG, however, is under pressure with cuts of around 0.7 to 0.8% coming in there. So that's the only sector which has been lagging so far. Let's look at the Nifty 50 heat map as well as the contribution heat map after that. If you can get us the stocks. Tech Mahindra, Indocent, Bajaj, Finserv, Trent, HCL Tech, Infosys. These are a few of the top gainers in today's session. Adani Ports under pressure, HDFC Life reacting to numbers. ITC, HUL also under pressure, Bharti Airtel, Sun Pharma. Asian Paints also under pressure in today's session. Let's look at the contribution chart as well to understand which are the stocks which are aiding the gain. So Infosys, the top gainer. What's interesting about Infosys is the commentary has been slightly weak. Analysts are not really positive. Yes, there are a couple of brokerages which are positive on Infosys, but that stock is seeing some smart moves. HDFC Bank also reacting to numbers. Reliance Industries will be reporting numbers this week, so that stock is in focus. Axis Bank is another one. What's on the losing end is ITC, Bharti Airtel and HUL. These are the top three contributors in terms of the downtick. So clearly, I mean, good picture in terms of where the large caps are concerned. The key is whether the broader markets are falling through or not.
Well, definitely. And, you know, it's slightly different from the session that we had on Thursday specifically, because on Thursday, we had the Nifty Bank 1,000-point move, and we've seen that continued move on the Nifty Bank today as well. But the mid cap and the small cap did not participate in the rally on Thursday. Today, however, mid cap 150 index almost up 2%. The small cap is also up almost 1.75%. And let's also look at the, you know, the BSE 500 contributors as well, because we're seeing some very smart moves across stocks today. Banking as well as IT is definitely in focus. So, and you know, some stocks like Just Dial on the back of, you know, its Q4 earnings largely in line with what was estimated, but the street has taken positive on numbers that have come out. The other one's Tata Elxsi, another one where numbers weren't as great. 5% constant currency fall in revenue in this particular quarter on a quarter-on-quarter basis. Stocks up 8% though. That's another one, which is, you know, the IT pack as a whole, slightly puzzling in a sense that we've seen the commentary come out. Estimates were weak, but we've seen a positive move across these stocks, and essentially maybe that, you know, the stocks have, you know, fallen so much. Tata Elxsi is down 46% from its 52-week highs. 52-week highs of over 9,000 rupees for the stock. Some other ones under pressure, Avanti Feeds, Marico, while, you know, some pressure on Home First as well. But largely today, Hiral, we've seen a day of small caps as well as mid cap movers, specifically in the IT pack, but also ones which are reacting on Q4 earnings. We've also seen some other stocks, you know, in the banking and Utkarsh, Small Finance Bank, all those stocks which are reacting positively as well.
So interesting moves, a lot of stock-specific action is what you're witnessing in the markets today. Let's also welcome in our guest, Sharmila Joshi. Sharmila, good afternoon and welcome to the show. Stay with us. Before we come across to you with what's your view in terms of the banking names, let me get my colleague in Harsh. Today, starting off with ICICI Bank, HDFC and the Yes Bank, three of them that have come out with their quarterly numbers. Harsh, firstly, ICICI, a stellar show. What's your update?
Well, ICICI Bank's numbers were a solid set. When you're looking at the net interest income number, it's come in a shade below 22,000 crore. The expectation was that it will be below 21,000 crore. So a solid beat on that count, 11% growth on a YOY basis, 4% uptick on a sequential basis on the NII number. When you're looking at operating profit, also very solid, 5% sequential uptick. That NII growth flowing very well into the operating profit. The OPEX has largely remained in line with the guidance that the management has given, and that gives very, very good comfort to the analyst community as well. It's a positive surprise across the board, as has been the case over the last 3 to 4 to 5 quarters that ICICI Bank delivers. Provisions down 27% YOY, QOQ. Now that number itself kind of reflects that asset quality is no concern at all. A 27% downtick on a QOQ basis. It's come in at 891 crore. The average analyst anticipation for this was sub 2,000 crore. So it's sharply below what the analyst community was penciling in with regard to provisions. Profit after tax, therefore, has surged versus expectations. Expectations were something around 11,600 kind of number. It's come in at 12,600 crore. So that differential really showing the outperformance that ICICI Bank has been starting to clip on a regular basis. 2.36% was the ROA number last quarter. It's coming at 2.52%, the largest among private sector banks in terms of ROA. The growth, though, was a slight disappointment. The loan growth has come in a shade below 14% YOY and just about 2% sequential. So if I had to pick out one thing that maybe was a miss to a certain extent, it would probably be the loan growth for ICICI.
Well, thanks for that, Harsh, but stay with us because, give us some key highlights from HDFC Bank's Q4 results as well.
Well, let's talk about HDFC Bank's numbers. Now, versus expectations, the numbers were largely in line. Nothing to complain about. Maybe a slight positive bias, if at all, on the numbers. Let's talk about net interest income first. Around 3% above expectations is the NII number. And you saw that in the margin number as well. From 3.43%, the margins came in at 3.46%. Of course, there was an IT refund involved as well. So outside of that, if I include the IT refund, it came in at 3.54%, which is slightly elevated of sorts. Not the right number to look at. In terms of core NIM, it was at 3.46%. Let's talk about provisions. Largely in line, absolutely in line with expectations. No surprises on the provisions number, which to me is a very key positive. That through this cycle as well, HDFC's provisions and asset quality has largely remained unaffected. When you're looking at the ROA inch up though, which is another key positive, because of that slight inch up in NII, you're seeing that translate to decentish uptick in operating profit as well as ROA, and therefore ROAs, which are expected to be around the 1.8% number, have come in at 1.92%. So that's something to look out for. We've already had a lowdown with regard to how the growth has been both on the loans as well as on the deposit side of things, so won't touch upon that. Largely in line set from HDFC Bank.
Harsh, I think it's a day where it's Harsh and Mahima on 12:30. They are the key stars today. Harsh, Yes Bank, what are we focusing on? Because that stock has been buzzing. In fact, more than getting a Harsh on that, we did speak to the management as well. First, let's just quickly listen into that conversation. And thank you, Harsh, for ICICI and HDFC as well.
So we are quite confident that not only we would be able to maintain those deposits, but we would continue to grow. For a very, very long time, I am saying, ultimately, when you are able to get the deposit, it's not always because of the pricing. It also depends on the quality of service which you provide and also the convenience you provide to your customer through the digital means. So I think both in terms of convenience to customers through their personalized apps and also the quality of service, we are quite confident that we would be able to grow deposits despite reduction in the rate of interest.
Right. So that's with regards to the three banks. Sharmila, coming to you. I mean, in terms of the loan growth, you had a HDFC Bank which actually stood out. There was some bit of softness from an ICICI Bank. Deposit growth for both these banks was absolutely strong. Margins for all the three banks have improved. Provisions, Yes Bank has been elevated though. And profitability, all of them are good. Now, yes, the scale for all the three banks is very different. What would your view be and any recommendations? Do you think these are buy on dip candidates now?
Yeah, so I think very simply I would rate them as HDFC Bank, ICICI Bank and Yes Bank. Yes, the scale is different, but I think the numbers and the expectations are very different for all three. For the longest time, ever since HDFC became the larger entity sort of after merging the two companies, we've had this debate ongoing in the market for the longest time, where people have been either very positive about the new entity or the numbers haven't delivered, so there have been a lot of negative voices as well. So I've always been positive, and I think now we are beginning to see at least the first bit of it getting delivered in the numbers. I think that the bank still has a long way to go. So from a longer term perspective, this would be the stock that I would be most positive on. ICICI Bank, again, we are seeing a sort of a re-rating underway. And I think typically 2 or 3 things have worked both in favor of HDFC Bank as well as ICICI Bank. When you get these numbers and you sort of flip over to next year earnings estimates, then, and especially in the case of ICICI Bank, when you're expected to, when you think that this will be the sort of growth that they will continue to deliver in the coming year, then a sort of a re-rating happens in the stock, which is what we are seeing in ICICI Bank. I think both HDFC Bank and ICICI Bank look, based on the number, going ahead, look very good to me. Yes Bank, I'm not so positive. Yes, it's a great thing that the numbers that they have delivered, but this is sort of coming from a slightly shakier background in the sense that people were very positive when the stock was bailed out, then they didn't deliver numbers, especially at a time when all banks were doing well. You had this bank not doing well. But the good news is now that provisions are down and now things look to be improving. And valuations are again, because the stock has corrected so much, fairly reasonable. But I think you need to give it another quarter to see whether this sort of trend continues. That said, I think these numbers were good and this stock price is also good. But as I said, clearly my order would be HDFC, ICICI, and yes.
So that's, the pick specifically for Sharmila as well. Another stock in focus is HDFC Life. Post its Q4 earnings, let's get in Harsh back again to give us some of the key highlights from the company's Q4 earnings. Harsh.
Well, HDFC Life's numbers, you saw APE growth of around 10% YOY, largely in line with expectations. Value of new business though grew 12% YOY. It was expected to grow faster than APE, but the VNB margins have come in better than expected. The VNB margins have come in at 26.53%, which is a solid 43 bips uptick on a sequential basis. So you're seeing a recovery in VNB margins, marginal positive, if at all, on this, but otherwise a largely in-line set of numbers overall from an HDFC Life. What really stood out is on the persistency side of things. The 13-month persistency has moved around quite a bit. From 86.2%, it's come down to 82.7%. But on the 61st month persistency, huge improvement. From 52%, it's come in at 61.9%. So, couple of positives on that count.
Thanks for that, Harsh. Sharmila, coming back to you, how are you viewing the HDFC Life's Q4 earning numbers? Is there any positive that you take out? Do you see that, despite the good results, is this a good time to enter the stock?
Yeah, I think the only positive that I'm taking is the fact that I'm overall positive on life insurance as a business. But yes, as we've been hearing, perhaps this quarter numbers were not that great. That said, I think valuations look reasonable. So I think if you're a longer term investor,
yeah, I think just some network issue with Sharmila there, but essentially, we've seen HDFC Life report really stellar numbers in this particular quarter. It's almost up 16% on a net profit basis as well. And while we wait for Sharmila to connect back, let's also pull up the IT pack as a whole, because we were expecting a downward day essentially for IT based on Infosys numbers, based on what has been the commentary from Wipro over the last week. But you've seen almost a 3.5% move today on the Nifty IT. And if you can pull up all the three stocks, specifically, of course, in the large cap as well, while the outlook was grim, specifically in terms of earnings growth, if you can see for something like, TCS, it was a negative for TCS as well as Wipro. Revenue fell by roughly 0.8% in this particular quarter. For Infosys, it was almost 3.5% on a constant currency basis compared to the previous quarter. EBIT margin growth was flat for Wipro, but it's fallen 20 to 30 basis points for both, something like a TCS as well as Wipro and Infosys as well. The only positive which we can take out from all of these results was specifically, of course, the TCV, which is the total contract value of the companies. It was a 19% growth on a quarter-on-quarter basis for something like a TCS, while a 4.2% growth for Infosys. And for Infosys, the company only reports its large deal contribution. So that has been slightly slowing down for the sector as a whole. So 4.2% growth for Infosys, but for Wipro again, it was a 13% growth on a quarter-on-quarter basis. Attrition, largely, it's within a 20 to 30 basis point increase compared to previous quarter, but on a year-on-year basis, we've seen an 80 basis point increase for TCS, a 150 basis point increase for Infosys, and roughly around another 80 basis point increase for something like a Wipro. And finally, in terms of guidance, and that was one of the key aspects, while TCS does not report any guidance, we've seen Infosys report a 0 to 3% kind of a number for growth for next year. Now, analysts were penciling in a 2 to 5% growth, but a very interesting note from Citi this morning that what they had anticipated compared to 3 weeks ago, that they were anticipating a much deteriorating guidance or a very smaller growth. It's not as bad, and maybe the street is looking at those numbers. Stock has also seen a 24 to 30% correction, so that also is one of the key aspects as well.
What's interesting to read over here is Infosys, the numbers in terms of the guidance is bad, the stock is up. Tata Elxsi as well, if you see, it's absolutely a flat result in a way. The stock is up nearly 7 to 8% right now as we speak. Now, Sharmila, one question that I would have for you on this front is it that the markets are giving you an indication that this is becoming a buy on dips market? Because in spite of that slight bit of weakness, you're seeing that buying activity that's coming in? Or do you think there is some bit of short covering that's happening as well? Because it's the monthly derivatives expiry, which is on Thursday as well, right? So two aspects that we need to consider. So if you have to look at the fundamental side as well as on the technical aspect as well, merging both of these, what would your view be in terms of IT? And then we'll quickly listen into Mastek as well after your view.
Well, I think it's more a question of buy on dips, really, because I think that not just IT, but we saw it spread across a lot of large cap companies, where when markets corrected due to all the the tariff wars that we had, we've seen since then a lot of buying coming into all the large cap names. So good quality names have been bought into, and valuations, I think, for a lot of these, especially like an Infosys, they do look good at this point in time. Tata Elxsi, I think you all were talking of it a little while earlier. You've seen a 40% correction in the stock, and a lot of mid caps are in that sort of space where the recovery really hasn't happened over there. So I think if this kind of market were to continue, you could expect to see an acceleration of a little more buying coming into good quality mid cap names. So I'm in fact concerned how market reacts to expiry in the next couple of days. But I think this buying has been really on the back of good valuations and feeling that you're getting an opportunity to get into good quality names.
Right, and in fact, what's interesting over here as well, I mean, 20 to 25% is the kind of drop that you've seen in terms of the IT index in 2025 itself. If you see the 1 year chart, I mean, it's the worst year-to-date performance the index has seen since inception. I mean, I don't think so there has been ever any year where this is the kind of fall that has happened. And if you talk about the previous lows that the IT index saw, that was back then in 2022, that's when the index had declined almost around 18 to 19% in the first 4 months of the calendar year. So yes, I mean, there has been a sharp sell-off in IT stocks, which has been disappointing in terms of FY25. Now, the outlook in terms of FY26 is what the street is watching out for. Let's also listen into the management of Mastek, what they had to say.
The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we have to partner and get subcontractors in our business. These are also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We are almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier, and therefore it's a one-time charge for the prior period.
Well, that was the management of Mastek. Looking at some interesting deals from the UK as well as India FT as well. That's what the management told us. But let's shift focus from the IT pack to the consumer pack now. Kansai Nerolac is in focus on the back of India's strategy call, which they held last week, where the company is targeting a growth of 9% CAGR over the next 3 years in terms of sales. Let me get my colleague Mahima to tell us more about this. Mahima.
Right, so as you rightly mentioned, Kansai Nerolac Japan did host an analyst meet, and there they've discussed India's strategic business. Now, in terms of the growth that they're penciling in, they've said that a 9% CAGR is what they're expecting in the next 3 years. In terms of margins, they're expecting a 14 to 15% margin that they want to achieve in the next 3 years, and by FY30, they plan to achieve around 18% of margins. Growth in the next 3 years will be led by the industrial segment. Focus will be on defending decorative market share in the key markets as well. Decorative recovery will take place in second half of next financial year is what the management has said. India to be a growth engine for Kansai Japan is something that the management has guided, and industrial margins are now moving closer to the decorative margin as well. And they've also said that they do plan to do bolt-on acquisitions that will be explored in the industrial segment. Now, Macquarie did come out with a note on Kansai Nerolac. They've maintained neutral with a target price of 255. They are saying that they like the focus on premiumization and the confidence that the management has shown overall in terms of margin expansion, but the impact of profit growth might take place because of Grasim's entry, that is Birla Opus, and that is what makes them cautious on the counter. So this is the overall view of the key takeaways from the call as well as what's happening with Kansai Nerolac.
Right, so that's with regards to where Kansai Nerolac goes, and a lot of factors that you need to consider in terms of the paint industry now, because you have a Birla Opus which has entered the segment as well. So, I mean, a lot of competition which is building up. Kansai Nerolac, they were seeing gains of nearly 2%, but one of the giants and a key competitor, which is Asian Paints. Now, the key question over here is the color of Asian Paints fading? Though the valuations are seeming absolutely attractive. Mahima is standing by to get us more in terms of what she decodes as a deep dive that she's done on her Asian Paints. Mahima, over to you. What is Asian Paints telling you in terms of the story?
Right. So as you rightly mentioned, the right question for Asian Paints right now is that is the color for Asian Paints actually fading or not, because the stock has tanked over 20% in the past 6 months. Now, what's not working? Well, a couple of reasons that are not working in the favor of the company. The first one is negative revenue, PAT, as well as value growth. In terms of where past few quarters are concerned, there's low single-digit volume growth, which is not working in the favor. There's demand constraints. Margins are under pressure due to inflation. Plus, there is international profit which is declining. There is deteriorating cash conversion cycle as well. The FIs are reducing or trimming their stake in Asian Paints, and there is promoter pledge which is also increasing for the counter. Now, let's look at each of these parameters one by one in detail. In terms of negative revenue as well as PAT growth, there was a time when in FY22 the revenue growth was 35% for Asian Paints, which has come to a negative 5% in 9 months FY25. In FY23 there was a 36% positive growth for Asian Paints in terms of its PAT, which has come to negative 30% in 9 months FY25. So competition, inflation hitting their overall top line as well as bottom line. In terms of volume growth and value growth in FY22, where the volume growth stood at 31%, it has now come down to 3%, and value growth, which was around 36%, is negative 4.8% when 9 months FY25 is concerned. So inflation is rising, but management is not able to catch up to that price hikes because of competition playing its role. And now, in terms of the overall outlook as to what's hurting the growth, there's sustained slowness in the urban centers. Asian Paints is largely there in tier 1 and tier 2 cities, which is why it's been impacted the most. There's competition from Birla Opus, which is playing its role in eating away some of its market share so far. There is downtrading, which is affecting the overall value delivery as well. In terms of government spending, that is slowing down, that is impacting their industrial growth, and seasonality playing its role because monsoons were extended in the past 1 year. Now, in terms of what's causing the margin pressure, well, price hikes not matching the inflation. Overall price hikes taken were around 12%, whereas inflation overall at an average was around 3% for all of its material. So that is not matching, and that is putting a pressure on their margins. In terms of margin trends, FY22 stood at around 18%. The management has guided a range of 18 to 20% for the margin, but 9 months FY25 came at around 17.9%, which is the lower end of what the management has guided. FY24 worth noting because the margin stood at 23% almost. In terms of cash conversion cycle, that has been on an increasing trend. What was 59 days overall in March 21 has gone to 93 days in March 24. In terms of the FI reducing its stake, where overall December 21 FI stake was around 20.38%, which has gone down to 13.6% in December 24. So FIs are also losing their confidence in this particular counter. In terms of promoter pledge, in the last quarter, the promoter pledge overall has gone up to 9.21, which was earlier 6.58, and has been in the range of around 7% odd. Lastly, in terms of the valuations, well, valuations have come down quite significantly because the company has not been doing well, plus the stock is also under pressure. There was a time when it was trading at 97 times. It has come to 43 times now. But the question really is that if the valuations are looking a tad bit attractive, is this the right time to enter the counter or not? Well, analysts recommend that there are, as per Bloomberg consensus, there are around 9 buys, 11 sells and 19 hold, but analysts at the same time are trimming their target prices as well. So this is the overall view as to what's happening with Asian Paints.
Thank you so much, Mahima, for getting us all the details. Sharmila, how would you look at a Asian Paints, a heavyweight, versus a Kansai Nerolac, where we got you the details, and you have a Birla Opus, which is already entering the race?
So I think precisely the troubles for Asian Paints has started, I think, somewhere in FY22 when we heard of the announcement of all these new players entering the market. Birla, I think even JSW said that they are going to have a paint unit, etc. And Asian Paints had, to my mind, over the last couple of years, there's been a double whammy. You've seen numbers not being that great. And also, you know, you sort of, you are like the most admired stock within that space. You get the best valuation. And then you have the fear of competition. You have numbers not being that great. And then you see a slow trimming from by FIs and general investors. And, you know, that pain on PE was very evident. So I think now going forward, I would be on the block that says hold. Because I think it's a great company. You just need to see whether they're able to rise to the challenge. And now we've had 2 years of this competition that we've been talking of, and how well they are able to sort of position, the new players are able to position themselves and really attract market share, etc. remains to be seen. I mean, we'll get the answers very soon. So from that perspective, I think I belong to the whole category, and nothing still that makes you think that yes, you know, sort of you bang the table and say you buy it at this price, or you'll never see it here, sort of. But at the same time, I would think that now valuations are at a level where you should hold and wait for a bit.
Right, so that's with regards to paint companies. Thank you, Sharmila, for getting us the details. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact, had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company?
Welcome back to Profit Buzzers. On to an NDTV Profit exclusive now. Maharashtra's Joint Transport Commissioner tells RTOs to shut Ola Electric stores operating without a trade certificate. Let's go across to my colleague Tushar for more on this. Tushar.
Good afternoon, Puneet. So what we have learned is that Maharashtra's Joint Transport Commissioner sent a letter, actually a show cause notice to RTOs in the state on 16th April that all the Ola Electric stores which were found to be operating without trade certificates have to be closed on 1 day's notice. Now, Maharashtra's Transport Department actually inspected 131 Ola Electric stores in the state out of 400 odd and found that about 107 were operating without trade certificates. 43 of them have been shut so far. 64 have to be shut in a 1 day's notice as per the 16th April email that was sent. A total of 214 Ola Electric scooters have been seized from these Ola Electric stores so far. This actually indicates that the Maharashtra government is stepping up its action against Ola Electric over the lack of trade certificates. That's what we know at this point of time. Puneet.
Thanks for that, Tushar. You know, a stock that's been under pressure across, since its listing, it's listing at around 76 rupees per share, but yes, definitely under pressure. Let's also welcome in Amit Bhuptani, the derivatives and technical research analyst at Nirmal Bang. We also have Sharmila Joshi with us as well. But Amit, let me come to you first on Ola Electric. Are the charts suggesting any kind of up move from these levels? Stock has been beaten down, since its highs of almost about 157 rupees per share.
Good afternoon. So overall, if you look at the structure, it still seems to be in the negative front. There are no signs currently of any reversal right now. Till the time counter is not getting stable above 60 level, till that point of time, we should not take any entry in this counter. Once the support for this counter is at 46. Once the 46 level gets broken out, then we will see more selling pressure while going ahead. So we should avoid this counter at this point of time.
Got the view, Amit. Sharmila, we have spoken actually about Ola Electric before. Now the company has actually mentioned they're looking to be EBITDA profitable for the automotive division in Q1 of FY26. If that's to happen, do you see any kind of positive reversal on the stock?
It seems difficult because I think, the sort of sentiment is more against the stock, and you have something or the other that doesn't work in their favor. So it's a little unfortunate because I'm actually very positive on the two-wheeler electric vehicle space. But my advice would be really to play a hero motor in that regard, or even currently I think from a valuation perspective I prefer hero motor the most. But that said, Ola Electric seems to have run into one set of problems after the other, and this just seems to be another issue that they'll have to address and face. So I think for me, it's an avoid as of now.
An avoid with regards to Ola Electric. What's interesting that is going to be with regards to Ola is what's the booking impact that could come in now. That is the key number that we need to get, and I think Tushar will be trying to get that information as well, that on the back of the store shutdowns, number of bookings that could get impacted as well. But moving on, Gail, that's a stock that is in focus as well, and that stock is gaining after the government has initiated company's integrated tariff review. What does this mean and how does this impact the company? Somit is with us. Somit, over to you.
Well, yes, Gail remains in focus given the fact that PNGRB has initiated the process where they will be reviewing the integrated tariff prices of Gail. Now, what Gail has sorted in their consultation was a fare of around 77.43 rupees as against the current fare of 58.61 rupees per MMBTU, which is a jump of nearly 32%, is what Gail is asking from PNGRB. Now, PNGRB has sought comments from stakeholders from the 1st of May, and this will be followed by Gail's response to this, which will be submitted by around May 16. Now, analysts are expecting the entire procedure to complete over the next 3 months, and then is what the final tariff will be decided by PNGRB. Now, Gail is asking for a 32% tariff increase, but the street is expecting that the final tariff hike could be anywhere between 15 to 20% and every 10% hike in the pipeline prices could increase Gail's EPS estimates by around 10%, and that's the reason why we are seeing such kind of a move when it comes to Gail. It's up around 4.5% in trade, but do remember it's just the consultation paper which has been floated. The final tariff announcement will still take time. Around it will come out in the next 3 months, and every 10% hike could lead to an EPS upgrade of nearly 10% for Gail.
So a 10% hike in terms of tariffs could actually lift your EPS by 10% for a Gail. Sharmila, what would this mean? Do you think Gail becomes a buying candidate right now? If you can just quickly pull up a 1-year chart or even a YTD chart of Gail to understand the kind of performance that Gail has given, taking into consideration the way oil prices have moved, what would your view be?
Can I say cautiously optimistic, because the news sounds good, but it's not my favorite sector. But I was just looking at the valuations; they seem reasonable. So if this news were to play out in their favor, then yes, I think there is an upside from this level.
Okay, so again, cautiously optimistic. Amit, what are charts indicating for a Gail? Because 1 year you've seen the kind of downtick that's come in from the highest levels. Do you think this is a recovery candidate?
Overall setup is positive. Currently, the resistance zone for this counter on the weekly and the monthly basis is at 200 level, and also 200 DMA counts at 200 level. So currently, once if a stock gets a clearance about 200 level, then we will see the momentum to be picked up towards the 215 to 220 levels. As per the current scenario, there has been a rounding formation which is getting created on the weekly chart. So I can expect more buying can be approached while going ahead. Once the 200 level gets a clearance, then there will be a confirmation for the buy side.
So that's with regards to Gail. But let's quickly pull up a few of the fertilizer counters. And if you see the news that is coming in at the bottom of your screens, that's ammonium nitrate manufacturer's license can now be given for a period of 10 years. So there has been an amendment, which is called the Ammonium Nitrate Amendment Rules of 2025. They shall come into force on the date of the publication in the official gazette, is what they've said. So Deepak Fertilizers is one of the stocks that is in focus on the back of the license that could be coming in. Chambal Fertilizers is another one which is seeing gains of around 2%. Earlier, I think the number of years that it could be given was 5 years, and now it has been increased to 10 years. So probably this could be a positive with regards to where fertilizer stocks are concerned. I think my colleague Varsha is actually going to join us for a Divi slab, but let me ask her this question. Varsha, I know I'm putting you on the spot with regards to the fertilizer stocks right now. The Ammonium Nitrate Act, which has been amended where the licenses can be given for 10 years. Firstly, which are the companies that gain to benefit out of this? And secondly, does this actually benefit or not?
Yes, it does benefit, and Deepak Fertilizers will actually benefit the most, considering they are expanding their capacity when it comes to ammonium nitrate, and also on the technical ammonium nitrate as well. So they have got good growth prospects when it comes to ammonium nitrate. Second stock that you mentioned, yes, Chambal Fertilizers will also gain from this news, and so basically, Hiral, all the fertilizers will actually gain from this announcement, because every other fertilizer does deal when it comes to ammonium nitrate as a product.
Interesting. So it's the fertilizer pack that will be in focus in terms of quantification as to how much who will gain is going to be crucial. Very quickly, Sharmila, let me come to you on all these names. Fertilizer companies are seeing a spike right now.
They look expensive, but having said that, as we get into monsoons, this will be a sector that will be on trader lists, and we will be looking at it a lot more closely. But at this point, honestly, the valuations look expensive.
Okay, so valuations are expensive from a fundamental perspective. Amit, anything that looks attractive on the charts?
Currently, Chambal Fertilizer looks positive. Counter is continuously trading in the uptrend levels, and I am expecting more momentum will be continued till the time its stop loss are not getting triggered out. Currently, the support for this counter is at 660 levels. So till the time 660 levels is not getting broken up till that point of time, we should create new long position and we can hold the new long position. The upside next supply zone for this counter is at 720 level. One counter comes near 720 level. At that point of time, we can expect some supply in this counter.
Got the view, Amit, but let's also, stay with Varsha and move on to another stock which is in focus, is Divi's Lab. Now, the company has announced a long-term manufacturing and supplying deal with a global pharmaceutical company. Varsha, what are some of the key highlights about this particular pact?
Yes, so as the company has signed, a long-term supply deal when it comes with global pharmaceutical company, although the name has not been mentioned because of the confidentiality, but a company will supply advanced intermediate. Now, please know that advanced intermediate is a raw material used to make API, that is active pharmaceutical ingredient, which is the main salt in the drug. So Divi will supply advanced intermediate to this global pharmaceutical company. Now this is a key area, the key focus, because this agreement comes under Divi's custom synthesis segment, which forms almost 54% to the total revenue. If I were to talk about the scope and impact, this agreement is expected to contribute meaningfully to Divi's revenue, and also Divi's is planning almost 650 to 700 crores of capacity of capex when it comes to capacity expansion. When it comes to this agreement, the expansion will be from at existing manufacturing facilities, and investment will be funded through internal accrual. As we all know, the Divi's has almost 3,500 crores of cash sitting on its balance sheet, so they need not take the debt for completing this agreement. And lastly, if you see, this agreement ensures assured supply for the customer and allows Divi's Lab to expand its custom synthesis business, which contributes almost 50% to the total revenue.
Thanks for that, Varsha. But Sharmila, let me come to you first, because we've seen the pharmaceutical pact getting impacted because of the tariff tantrum, and seen some correction in the mid-cap stocks, but we've seen stocks like Sun Pharma, Cipla doing well, and Divi's is also one of them. How are you viewing Divi's on the back of this particular announcement, and also currently any estimates or something that you're waiting for in terms of Q4 also?
No, I don't have any estimates, but the news sounded good. And overall, I think pharma within the various sectors, especially the export-facing sectors, I think it's very difficult to imagine that overnight you could see some manufacturing set up in the US, because, as I think we've discussed this earlier in terms of manpower, you don't have the necessary people to set up the kind of factories that you require to be able to manufacture drugs there. So to that extent, I think this sector will sort of be relatively unscathed. So I would expect recovery overall in the sector, and this news did sound good. It's a strong player within the pharma space in terms of valuation, plus all the various positives that this agreement will give them. So this certainly looks very nicely placed.
And Amit, the charts also, like currently 3.6% up Divi's right now. Any view that you have on Divi's currently based on charts? Do you see any more upside from these levels as well?
Definitely, chart setup looks positive. On the daily chart, we are seeing that the inverse head and shoulder pattern has been created, and the breakout also took place in this counter. As per the targets on the upside, as per the pattern, it seems to be near 6200 to 6300 levels, and the support for this counter is at 5650 level. Till the time 5650 level is holding strongly, till that point of time, we can expect buy and dip strategy, and also new long positions can be created at this point of time.
Right, so that's with regards to Divi's Laboratories, but let's shift focus to a list of companies, wherein the lock-in with regards to the IPO, that is expiring. Few of them is in the next 30 days, few in the next 60 days as well. Varsha is standing by with the list because almost $40 billion worth of equity will be coming into the market. I'm sure it's not the entire list because some portion will be promoter driven as well.
Yes, so actually, Hiral, we are looking at almost we are looking at 63 companies wherein we'll be having this lock-in expiry, and this could release a total of almost $40 billion worth of shares into the market. Now, not all these shares will be sold immediately because a lot of a portion remains with the promoter and the promoter related group. But if I want to talk about the 1 month share lock-in in opening, so currently there are no 1 month lock-in shares, but if you look at the shares becoming free in the very near future, you have Stallion India Fluorochemicals, wherein 3.3 million shares will unlock, which represents almost 4% to the outstanding shares, followed by Delta Water and Infra, where almost 1.1 million shares will be available, again 4% to their total shares. Dr. Agrawal's Health, a large release of almost 10.9 million shares will be released, which is 3% of their total outstanding shares. This is followed by Ajax Engineering and Hexaware. Also Quality Power Electrical, wherein 5 million shares will be unlocked, significant, that is 6% to the overall outstanding shares. And moving to the significant lock-in events beyond next month, we see some notable releases. You have Waaree Energies has substantial, almost 153 million shares unlocking very soon on April 25th. In early May, you have Blue Jet and Afcon, which have lock-ins lifted. Later in May, if you see, you have large unlocks in Sagility, Swiggy and Niva Bupa Healthcare alongside. You have Aadhar Housing Finance and Ask Automotive. And this larger percentage, if you see, particularly in Waaree, Afcon, Sagility, Swiggy and Niva could be important to monitor.
Right, so a lot of stocks that will be in focus as well. Thank you, Varsha, for getting us the details. I think one clarification we'll need is whether the lock-in was in terms of the amount that could be potentially released, or it's the number of shares. So we'll get a clarification on that front. But I mean, I'm sure we will not be able to go through the entire list, but few of the bigger names, Sharmila, from there, if you have to look at the likes of a Swiggy, or for that matter, a Waaree Engineers, Afcons, anything that comes to your, radar?
No, not really. I think we'll have to take the news as it comes, really. It'll be interesting, but I don't have anything really earmarked as of now.
Right, so that's with regards to a lock-in of 6 months and beyond. That's the kind of shares that we are watching out for. Amit, any stocks that you like from this list?
From this list, I like Sagility. As per the overall setup, the counter is still trading on the positive front. If you look at the chart setup on the weekly and the monthly front also, it is looking on a positive front. There is not much of the downside which we are expecting right now. Currently, the risk reward is on the favorable front. The resistance for this counter is at 44.50 level. Once the 44.50 closing comes in this counter, then we can expect 55 to 60 level in this counter.
Got the view, Amit. Now, we spoke about this particular stock at the start of the trading session, Just Dial, and it has shot over 9% after the now up almost 11% now after the company's Q4 earnings. Mahima joins us with some key details about the Q4 earnings of Just Dial. Mahima.
Right. So in terms of the margin expansion, that has come in as a surprise for Just Dial, and this is on the back of top line growth as well as cost efficiencies that have been achieved by the management. Other income is another factor that has led to this growth because that is up 40% QOQ, and this is on the back of declining bond yields as well as higher treasury income. In terms of profit before tax, that has been up around 22%, and this is due to lower effective tax rate as well. Now, in terms of numbers, revenue is up around 7%, EBITDA up almost 22%, margins at 29.8% versus that of 26.1%, and net profit has shown a significant improvement of 36%. In terms of the key operational metrics, total traffic was up 11.8% for the counter, total active listings were up almost 12% for the counter, and total paid campaigns increased by 5%, and lastly, total app downloads also came in as a positive number at around 9.4 times. So all this together has led to this kind of growth in the top line, and that is why the stock is seeing significant gains in trade today.
Got the view, Mahima, and thanks for that. Sharmila, let me come to you first. Just Dial Q4 earnings, as well as, we've seen something like an India Mart also be under pressure. Anything that you like in this particular space?
Just Dial looks interesting. I was just looking at the valuations as well as the numbers over the last couple of quarters. So I think this kind of a number with what it, with the metrics on which it has improved is very interesting. Probably, I think also because of the correction, the valuations look interesting at this point in time. So I think there is, though it seems to be up 11%, I think you can see a further upside in this stock.
Amit, do the charts suggest any kind of further upside, on something like a Just Dial? Stock was depressed around the 700 to 800 rupee mark, and we've seen a very wild moves over the last 1 year. Does it warrant getting into the stock right now?
Currently, counter is approaching near resistance zone of 200 DM around 1060 level. So once if 1060 level gets a clearance, then only we might expect next leg of buying. At this point of time, risk reward is not at all approachable and not at all worthy at this point of time. So we should wait for new long position. Whomsoever is holding a long position should place a dwelling stop loss at 1000.
Right, so that's with regards to where Just Dial goes. One stock that is in focus on the back of earnings today is a IGI as well. Let's quickly pull up that one on the screens. Stock trading at the day's highest levels with gains of around 2.5%. There is some 4% right now. It was locked in upper circuit. What's interesting is because it's a growth of around 9 to 10% if you see in terms of where the top line is concerned, where the other income is up around 53% with regards to the company. Profits have seen a growth of around 11 to 12%. There has been a reduction in terms of the stock in trade by 83%. Margins have also seen some bit of an improvement. Amit, what are charts indicating with the IGI?
This counter, the downward trend line breakout is at 385 level. Till that time, 385 level is not getting broken out. Till that point of time, we will not get confirmation in this counter. So we will wait for the 385 breakout. After that, only we can create new long position.
Okay, so we'll wait for a breakout to happen. Very quickly, Sharmila, with regards to IGI, would you recommend this one or would you go with any of the jewelers?
I would actually stay away from the city gas distribution space entirely. We spoke of Gail also earlier. So here again, valuations look interesting, but this is not a sector that I'm currently in favor of.
I was asking about IGI, not IGL.
Oh, I'm so sorry.
Yeah.
I don't have an IGI.
Okay, so no coverage with regards to IGI, but completely out of time. Thank you, Sharmila. Thank you, Amit, for joining us on the show and sharing the views. Thank you from, Puneet, the show, the team that put the show together, and myself. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, we are gaining for the 5th straight trading sessions. We have gained nearly 300 points so far in the day.
Absolutely, and let's look at the gainers. Who are the gainers when it comes to benchmark index? You have Kotak Mahindra, you have IndusInd Bank, you have Bajaj Finserv, Axis Bank, and also Trent. Which are gainers when it comes to Nifty 50. But on the loser side, you have Adani Ports, you have HDFC Life, came out with its Q4 FY25 numbers. ITC is also on the losing trend. ITC acquires 24 Mantra organic considerations of rupees 472 crore paid in cash, while you have HUL and Bharti Airtel also, when it comes to loser side. But let's look at the sectorial heat map. Let's see which are the sectors. But I think barring FMCG, yes, all the sectors are in green. You have, Nifty IT, which is actually up almost 1.2%. Nifty IT is up almost 2.7%. Sorry. Nifty Bank is up almost 2%. Realty is up 1.8%. But Nifty FMCG, it's down almost 0.7%. But let's see what is actually happening when it comes to broader markets. Interesting things in broader markets. If you see Nifty Midcap 150 is up almost 2%. When I talk about the gainers, you have Tata Elxsi came out with its Q4 numbers, though it missed street estimates, but management has given a good outlook, and that's the reason we are seeing the Tata Elxsi buzzing at 9%. You have Suzlon also, which is buzzing now because the Ministry of New and Renewable Energy released a new draft notification for revised list of models and manufacturers for wind turbine models. You have Nippon Life, Coforge and Vodafone, which are in the gainers list when it comes to Nifty Midcap 150. On the loser side though, you have Marico, you have GSK Pharma, Bayers Corp and Fortis Health. But if I were to talk about small cap 250, Nifty small cap 250, on the gainers side you have Just Dial, again strong Q4 FY25 numbers. You have Avas, Finserv, Alcargo, Logistics and KFintech. Whilst on the loser side, you have Avanti Feeds, RK Forgings, Kaplan Point and Home First Summit, which are actually losing when it comes to small cap 250.
Right, Varsha. But then what's happening with Divi's? I heard they won a big contract, big beneficiary or big financial benefit coming in for Divi's on the back of this contract win that we have seen. I guess they will be doing a capital expenditure, right?
Yes, actually, Somit, so Divi's is known for, custom synthesis business, and they have announced an agreement, a long-term manufacturing and supply deal with a global pharmaceutical company. Now, company will supply advanced intermediates. Now, please note that what is advanced intermediates? It's a raw material used for making API, active pharmaceutical ingredient, which is the main salt in the drug that you use. So, Divi's will be making intermediates for manufacturing of APIs. Now, this is a key area when it comes to Divi's custom synthesis business, and this contract or agreement is expected to contribute meaningfully to Divi's revenue, though partners' name and specific details are confidential and they've not mentioned the specific details when it comes to this agreement, but they are planning to do a capex of 650 to 700 crore and which the expansion will be at existing manufacturing facility, and investment will be funded through internal accruals. We all know that Divi's has more than almost 3,000 crores of cash sitting on their balance sheet. If I were to talk about the benefits, so this agreement ensures assured supply for the customer, and this will allow Divi's lab to expand its custom synthesis presence. So custom synthesis now, if you see, contributes almost 50% to their total revenue. So this agreement will actually enhance the custom synthesis segment for them.
Right. Well, let's also welcome in Gaurang Shah, the head investment strategist with Jio Financial Services. Gaurang, coming to you first on Divi's lab. This new contract win plus the capital expenditure that they have announced, overall the street also believes that the impact of Trump tariff, even if it's applied, will be less on Divi's lab. How are you looking at this counter?
Well, thank you so much for having me on the show. Good afternoon to all of you all. So, as a brokerage house, we at Jio Investments Limited remain positive on the entire pharma play, whether it is to do with the generics or the APIs or the CDMOs. And along with pharma, we are positive on diagnostics as well as healthcare, that is hospitals. And the reason for being optimistic about all these three combined universe together is purely with the kind of dominance that India has had in the past, present, and will have in the future with respect to its capability, capacity, R&D, and production capabilities. Yes, short to medium term, there are going to be a little bit of concern or overhang. But if you are going to bring pharma under the tariff regime, then it is eventually you are going to put a lot of hardship to the citizens of your country, that is the American citizens. The cost of healthcare will spiral up to no extent. And in the present scenario, I don't think any wise leader of a country would want to venture or risk that. So news flows are there, maybe positive, negative, but we remain positive on Divi's laboratories from a long-term point of view.
Right. Another stock that has been buzzing in trade is Gail. Now, this is after the government initiated the review process of its integrated network. Now, do remember Gail has sought for a tariff of nearly 77.43 rupees per MMBTU as against the current tariff of 58.61 rupees. So, they are asking for a 32% hike. So, what is the timeline here that one can see? Now, PNGRB has sought stakeholder comments by May 1st. This will be followed by Gail's responses, which should be submitted by around May 16. Post which there would be an open house. So analysts are expecting the entire process to get completed over the next 3 months, and that's when we'll get a final tariff. Now Gail has sought for a tariff of nearly 77.43 rupees per MMBTU, which is a hike of nearly 32%. However, the street is estimating that the actual tariff hike would be anywhere between 15 to 20%, and this tariff decision will take around 3 months of time. And as per analysts, every 10% hike that comes in for the pipeline tariff, the overall EPS of Gail also gets increased by around 10%. So that is one stock that we need to watch out for. Also, CLSA had upgraded its rating on Gail post this announcement to outperform from hold and also hike the target price to 220 rupees. And that's the reason why the stock has been gaining in trade. Gaurang, have you tracked Gail as a stock? Lower gas prices could benefit the company as well, plus the pipeline tariff hike that has come in. Multiple triggers we are seeing when it comes to Gail.
So we have been maintaining as a disclosure prudent to give that on Gail, that is Gas Authority of India, for a pretty long time. We continue to have a positive view on gas exploration, gas utilities. The final confirmation will come through after the inputs from the stakeholders of this hike of gas price. But I think the more positivity we at Jio Investments that we have is purely the capability of making India self-reliant and exploring the natural reserves as far as onshore, offshore and ultra deep sea reserves are concerned. And the government is moving in the right direction as far as the exploration NELP policy is concerned. So we have been positive on gas for a pretty long time. Now, whether this will finally come out in some kind of a price hike, only time will tell, but we remain positive.
Right, so positive. Now, moving on, Just Dial. So Just Dial has shot up by over 9% today. Now, this is on the back of its fourth quarter earnings. Mahima has all the details.
Right, so in terms of the margin expansion, that has come in as a surprise for Just Dial, and this is on the back of top line growth as well as cost efficiencies that have been achieved by the management. Other income is another factor that has led to this growth because that is up 40% QOQ, and this is on the back of declining bond yields as well as higher treasury income. In terms of profit before tax, that has been up around 22%, and this is due to lower effective tax rate as well. Now, in terms of numbers, revenue is up around 7%. EBITDA up almost 22%, margins at 29.8% versus that of 26.1%, and net profit has shown a significant improvement of 36%. In terms of the key operational metrics, total traffic was up 11.8% for the counter, total active listings were up almost 12% for the counter, and total paid campaigns increased by 5%, and lastly total app downloads also came in as a positive number at around 9.4 times. So all this together has led to this kind of growth in the top line, and that is why the stock is seeing significant gains in trade today.
Well, thank you, Mahima, for all the details. Gaurang, for Just Dial, there's a margin expansion, of course, cost efficiencies was taken care by the company, but also the profitability that you're seeing is boosted up by other income as well. So your view when it comes to Just Dial, how are you seeing the operational metrics? Are they working for them?
So again, firstly, we don't have coverage on Just Dial, so I won't give specifics. But what my understanding, Asha, is that there is immense amount of competition that is coming in to this sector, both from established players as well as not so established players. Survival is going to be of crucial importance in terms of bringing in efficiencies and controlling your cost. Won't be able to comment more specific on buy, sell and hold since we don't have coverage.
Right. Another stock that has been buzzing, or in fact there is a lot of news flow, is Zomato, which goes by the name Eternal now on the stock exchanges. Now, there are multiple reasons to focus. Firstly, on the fundamental side, what would be the impact of capping this FII limit to 49.5%? Let's get in Mahima to explain those details.
There are two things here. As you rightly mentioned, the board has approved an FII ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led and this will likely gain focus post the FII overall holding is trimmed. Now, in terms of what has happened so far where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DI funds, and post the QIP, FII ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% earlier. Currently, DI ownership stands at around 23.5% and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is eternal.
Well, now the other part to this is the fact that because of capping this FI limit at around 49.5%, there could be massive passive selling that we can see because of Zomato being included or being part of the MSCI and the FTSE index. Now, there could be outflows of anywhere around $1.4 billion on Zomato. Now, why this selling? because the company has capped the FII limit at 49.5%, while the current FPI ownership stands at close to 44.88%. Given the fact that the headroom between the current ownership and the limit is less than 10%, this could lead to either deletion of the stock from the index or at least lower weightage. Now, when it comes to MSCI, Zomato holds a weightage of around 1.33%. So this weightage could become half, and there could be an outflow in one shot of around 600 to 800 million US dollars. Now, when can it happen? It can happen in the May 2025 review or in the August 2025 review. Now, when it comes to the FTSE, now the current weightage stands at around 1.17%, and whenever the FI headroom comes down or comes below 10% limit, then the stock gets deleted. However, the outflows when it comes to FTSE will be in a staggered manner. It will happen over the next 4 to 5 quarters. Every quarter we could see an outflow of anywhere between 70 to 100 million, depending if the headroom continues to remain below the 10% mark, and the overall outflow could be anywhere between 500 to 600 million US dollars when it comes to FTSE passive selling. And from MSCI, we're expecting around 600 to 800. So total 1.4 billion US dollars of outflow is expected on the back of this move that Zomato or Eternal has taken.
Thank you so much for that. Gaurang, will Zomato have an upper hand, compared to Swiggy?
No. Well, honestly, I look at fundamentals, and as per my understanding, and please correct me if I'm wrong, entry, exit, inflows, outflows only matters for that particular day for not then more than a half a minute or a minute. This does not impact the working of the company. That is what my understanding is. We have been, as a disclosure, prudent to give that on Eternal, erstwhile Zomato. We were positive during the IPO. We had an IPO note on the subscribe side for Zomato at that point of time. And as we speak, we have a standalone buy report on Eternal Limited from a long-term point of view. Like I mentioned, news flows about entry, exit, inflow, outflows would only matter for that particular day, and that too maybe for half a minute or a minute, not more than that.
Right, Gaurang. Another consumer-focused stock, ITC. It is in focus on the back of the acquisitions that it has announced. It is acquiring not only the organic packaged food company 24 Mantra, but will also be increasing its stake in Ayurvedic company Mother Sparsh. Let's get in Mahima with more details on the same.
ITC is definitely on an acquisition spree. It is set to acquire 24 Mantra Organic for consideration of 472 odd crores, and this will be completely in cash and through internal accruals. Just a brief about what 24 Mantra Organic does. It's a brand of organic packaging food comprised of 100 plus organic products across grocery staples, so that includes your rice, wheat, pulses, etc. The international sales for this particular counter is more than almost 50% of company's overall sales, and primarily USA based. In the last 3 years, the company's turnover in FY24 stood at 306 crore, followed by 327 in FY23 and 327 again in FY22. So revenues have slightly stagnated and declined as well. Now, what does this acquisition exactly mean for ITC? Well, acquisitions is overall 1.5% roughly of ITC's FMCG sales, but ITC believes that this network is ready for a 3x scale growth in terms of operation. Valuations at FY24 sales multiple stands at 1.5 times for the particular acquisition, and valuations are lower as compared to what recent acquisitions that ITC has already made in Ample Foods, which was valued at around 2.3 times. Lastly, in terms of acquisition of Mother Sparsh, well, ITC already holds 26.5% stake in Mother Sparsh, and it's set to acquire balance 73.5% stake. Mother Sparsh is basically a D2C brand in premium Ayurvedic as well as natural baby products. So over the next 2 to 3 years, the valuation stands at around 2.5 billion. This is what the company expects, and sales multiple of 2.5 times based on annual revenue run rate of around 1.1 billion rupees. So this is the overall view of what is happening in ITC with respect to the acquisitions it has made.
Right. Gaurang, how are you looking at ITC? A clear focus coming in from the management side of being less dependent on the cigarette business. But when do you see, or do you see there could be a value add with this more focus coming in on the FMCG business?
So my understanding is that 24 Mantra is going to be more of a value-added product, especially with the kind of 100 plus products that they have under their belt in form of organic food. It has a very strong brand. It has got a very strong presence, and it has got relatively strong product recall as far as consumers are concerned. This is one step towards bringing in an organic portfolio by ITC rather than making a beginning from the scratch, acquire a company which is well established. So I think it's a good business strategy. The other acquisition, I don't know much into it, but I'm sure 24 Mantra will augur extremely well for the product offering that ITC already has.
Right. Thank you for that. Moving on, let's shift our focus to banks, wherein banks are leading the market today after ICICI Bank, HDFC Bank and Yes Bank came out with their fourth quarter results over the weekend. All three banks witnessed strong growth, but first let's look at ICICI Bank. Harsh joins us with more details.
Well, ICICI Bank's numbers were a solid set. When you're looking at the net interest income number, it's come in a shade below 22,000 crore. The expectation was that it will be below 21,000 crore. So a solid beat on that count, 11% growth on a YOY basis, 4% uptick on a sequential basis on the NII number. When you're looking at operating profit, also very solid, 5% sequential uptick. That NII growth flowing very well into the operating profit. The OPEX has largely remained in line with the guidance that the management has given, and that gives very, very good comfort to the analyst community as well. It's a positive surprise across the board, as has been the case over the last 3 to 4 to 5 quarters that ICICI Bank delivers. Provisions down 27% YOY, QOQ. Now that number itself kind of reflects that asset quality is no concern at all. A 27% downtick on a QOQ basis. It's come in at 891 crore. The average analyst anticipation for this was sub 2,000 crore. So it's sharply below what the analyst community was penciling in with regard to provisions. Profit after tax, therefore, has surged versus expectations. Expectations were something around 11,600 kind of number. It's come in at 12,600 crore. So that differential really showing the outperformance that ICICI Bank has been starting to clip on a regular basis. 2.36% was the ROA number last quarter. It's coming at 2.52%, the largest among private sector banks in terms of ROA. The growth, though, was a slight disappointment. The loan growth has come in a shade below 14% YOY and just about 2% sequential. So if I had to pick out one thing that maybe was a miss to a certain extent, it would probably be the loan growth for ICICI.
Right. Thank you so much, Harsh, for all the details. Gaurang, ICICI outperformed HDFC Bank, but there's been concerns over the the slow AUM growth that the bank has seen. Just wanted to have your view.
Well, so I don't see it as a big concern, to be very honest. And my sense is that you also have to look at the backdrop of events under which there was a little bit of constraint as far as the loan book growth is concerned. Our understanding at Geojit Investment is that the loan book growth, not only for ICICI Bank, but almost all the strong banks, whether it is public, private, or strong NBFCs, is going to grow much faster than what is anticipated. And that is purely because of credit demand that is going to come through. So again, I'm prudent to give a disclosure. We have coverage on both ICICI Bank and HDFC Bank. Our rough approximate targets, though we have not done a detailed homework on it, but an approximate target of 1650 cannot be ruled out on ICICI Bank from a long-term point of view.
Right, thank you, Gaurav, for joining us. Thank you, Gaurang, for joining us and giving us all those details and your perspective about the markets and the stocks that we discussed. Moving on, Delhi Airport runway is set to reopen in the first week of May, bringing relief to passengers who have faced significant delays in the recent time. My colleague Aishwarya gives us more details on the same.
One of the busiest airports in the country, in the capital, Delhi's Indira Gandhi International Airport faced many snags, in fact diversions and delays of multiple flights, over 800 of them, of which about 68% of the total number of flights, of the 1300 flights, faced delays on Sunday, and it did catch the ire of a whole lot of passengers as well. One of them, a notable one, being the former Chief Minister of Jammu and Kashmir, Omar Abdullah, as well, who tweeted about a delay and diversion of the flight from Jammu Kashmir to Jaipur, which was supposed to land in Delhi but was diverted to Jaipur. Now, authorities have said that many reasons and pointed fingers at poor planning of the airlines and ignored warnings as well. There was a runway 1028 which was scheduled to be under works for its repair as well, which airlines have ignored time and again is what they have said. Apart from that, a change in the direction of winds from westerly winds to easterly winds is also one of the reasons why there have been delays across the board of multiple flights at the Delhi airport as well. So for now, the authorities, Delhi airport will be reopening the runway after these massive delays in the first week of May is what they're saying. They have also said that airlines have failed to adjust flight schedules and notify passengers about delays, reschedules as well as cancellations. And this non-action has led to a lot of operational delays and a lot of inconvenience for passengers as well. A lot of chaos we can see at the airports, inside the airports as well, and efforts are being made to restore these kind of snags, and in order to reduce the delay time, also efforts are being made not only at the airports end but also at the airlines end as of now.
Well, thank you, Aishwarya, for all the details. Viewers, this is all the time that we have got on this edition of Profit Top Trade. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election, because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind? Hello and welcome. Good afternoon. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And let's quickly look at the markets. Plenty to talk about today. In fact, 1.25% higher on the Nifty. We've built on those gains. Let's look at it intraday as well. It's a very solid day of trade. We're close to the day's high. In that sense, 24,189 is the high we've made. We're just about 40 points away from there. So just off the day's highs. And when you're looking at the heat map as well, there are plenty of big movers. IT, banks dominating the pack, but then you have a Trent as well, a power grid as well contributing. Within the financials, you have a Bajaj Finserv also doing well, and within the auto pack, you'll see Bajaj Auto and M&M. So it's a couple of pockets which are showing zing, but some of these stocks also contributing healthily to the Nifty. But it's largely in terms of contributors, if you can pull those up, it's the heavyweights which are pulling the index at least higher in trade today. Look at those, Infra, Reliance, HDFC Bank. Those are three stocks which are really pulling the index in trade today. So heavyweight, dominant, but nonetheless, we're seeing very good traction across the board. Let's look at it sector-wise as well. Let's pull up the sectoral heat map. And thereafter the advanced decline before I take it to Neeraj for broader markets. Look at the top gainers in terms of sectors, IT, energy and banks. These are the three top gainers. Along with it, metal is also doing fairly well in trade, 2% higher on the Nifty metal index as well. But PSU banks really ruling the roost today. Let's pull up those PSU banking stocks. And within that as well, you're seeing good traction even among the heavyweights. Something like an SBI is doing okay-ish today. But look at a PNB, a Can Bank, a Bank of Maharashtra flying away in trade. A Bank of India, UCO Bank, all of those doing fairly well for themselves. So that's the kind of texture. Let's look at the advanced decline. And it's a good sectoral trend playing out. All sectors in green except FMCG. But even when you're looking at the advanced decline, very healthy in terms of the breadth. There you go. And it has been so since early morning. So good trend with the advanced decline gap widening a wee bit, if at all. Definitely not contracting, Neeraj. So positive across the board at this point.
Positive across the board for sure, Harsh, and it's showing in the way the small cap index is doing as well. 1.7% higher for that index is also very, very solid. The breadth, as Harsh said, is looking very positive. Let's pull up the BSE 500 winners and losers just to get a sense of which are the stocks which are really moving up in trade, and then the positives really make up the bigger list, if you will. Look at that, the disparity. Avanti Feeds is the top loser, down only 4%. The gainer list, Just Dial, results impact 11%. Tata Elixir, you could argue a bit of short covering and a bit of what's happened in IT per se. That stock is doing well. Vodafone Idea is up in trade. And then some of the financial names, the likes of Aavas, some of the smaller banking names are all out there. Last but not the least, both Suzlon and Inox win. And if you can pull up those stocks individually, I think they have had a decent move in the session today. So keep them at the back of your mind as well. Norms have been changed for indigenous procurement in the wind equipment space, as a result of which this is happening. Now, Harsh, are you going to do some factors or should I go to Meghna?
Yeah,
okay,
let's
Harsh.
look at what are the 5 trends that are playing out in markets. And you know, the first one there is that the Nifty is up 1+%. 5th straight session that the Nifty is up, and up 1+% in 5 of the last 7 sessions. So the traction in April has been fantastic and continues to be that way. At least over the last 10 odd days, we've seen some very good traction on the Nifty 50. Heavyweights are contributing to the Nifty gains. We did see that. IT, banks, heavy, both of those contributing 2% plus. And let's pull up the sectors exactly there. Banks, metals, IT. All 3 of those are 2% up in trade, and which is spilling over onto the Nifty. Bulls in charge, the breadth is clearly strong, it's positive. And last off, FMCG index, probably the only spot in terms of sectors which is trading in the red. Outside of that, across indices, broader markets and sectoral indices, we're in the green. Neeraj.
Let's take it to Meghna Malkan, wealth mindset coach and author, joins in right now on the show. And I presume for the first time on the channel, Meghna, it's been a while, but good talking to you. Neeraj here, thanks for taking the time out. Is everything as well as the Nifty is making it out to be?
Good afternoon, Neeraj. Thanks for having me. Yes, it's been a while. Nifty is making out a completely different picture. Yes, things are way better than what we experienced last month. But though I feel this is a frenzied move, and though the trends have been changed, but Nifty, the way it is, it's painting a picture which is a little different that's playing out in stocks. I would agree banking stocks, financial sector stocks are definitely that I would bet on the longer side. But I believe it's a long-term game. I believe we could be out into an uptrend, then get back into a consolidation. So if you ask me, yes, the downside is something that we wouldn't see for a while right now, but then it would take for broader indices as well as stocks across major indexes to settle down, to consolidate, to get convinced that this is the time to buy. That's what I would say.
Got it. So Meghna, so many people talking about the bank Nifty, a bit of a FOMO effect coming in, right? That we missed out the rally. So if you're talking about the need or probably the probability of consolidation, would that hold true for bank Nifty as well?
I guess, so see, Bank Nifty is in a completely new zone, seems to be super outperforming everything and all the major indices as well. So, but I do see a very strong support at 54,700. But everything goes on in circles, right? Everything goes on in cycles. So I would not be in a hurry to get into a frenzy to buy because I know my risk is way too far behind. I would wait for a retracement at a decent support, and 54,700 seems to be a good support to me on Bank Nifty.
And Meghna, therefore, your picks for this afternoon.
PFC looks good to me considering that we've had a nice consolidation. Its momentum is moving above the 60 zone RSI. If you see, it's had multiple attempts to move out of 60 and now it's finally moving over 60 zone. It's breaking out of the consolidation. Volume seems to be supporting the price move as well. So I would go with PFC. 430 is a good level where I could place my support on this current trend, and 470 is the first target that I would look at.
Okay. Thank you, Meghna, for all of those views. Quick view, Meghna, one more on a Trent, because that one's standing out among the others. The others, in terms of sectors, there's plenty of tailwind on some of the other counters within the Nifty pack, which are doing well in trade. What about a Trent, and what are you seeing on charts with regard to that one?
If I see the chart, weekly charts look a little icy. Even in daily, I see a huge gap there. If you see, it's kind of filling up the gap, and there is a resistance that I see here at around 55.50 levels. So I think there is. Right now, I wouldn't buy into the resistance, but I do see a very strong support where it took support in the previous time as well, which is 4,700 levels. So if I do get a dip at around 4,900 to 5,000 levels, I would definitely buy at that point of time, considering there's volume support as well at that point of time.
Got it. Meghna, tempted to ask you, this morning we got all got a bit surprised by looking at the strength in ID. Fundamentally, it didn't seem like it would, but it gave a big gap up, right? Now, it's an index that has really been beaten down. Do the charts suggest whether it's a dead cat bounce or is this a sustainable one? Would you trade any of the IT names?
Well, for me to call it a sustainable one, I would like for it to sustain the price that it is for at least a week to come. I would neither put it as dead cat bound because there is volume support, but I would rather have the price sustain here for a week. If you see the chart, at least from the beginning at the daily chart, the momentum still looks very weak to me. There are no major divergences at the bottom for me to really get interested into this as of now. So I would just wait and watch for one more week to see how the price settles at this zone.
Okay. And Meghna, just final question. I mean, within this pack, IT as well, because large caps are making one kind of a move, but a lot of broader market stocks are kind of chalk and cheese. We have an emphasis which is doing very well, maybe not as much in a KPIT. Tata Elxsi doing very well, maybe not as much in some others. Is there a set of or a couple of standout names that you would particularly watch out for, even if you don't initiate trades right now, within the wide IT bucket?
Wipro was something that I was looking at because I do see some kind of divergences forming at the bottom. Volume seems to be drying up on its way down. So Wipro is something that I'm just kind of watching it from the daily to the weekly chart, seeing how the prices are playing out, and the volume is reacting based on like how the prices are playing out at the bottom.
Got it. Meghna, fantastic talking to you. Like I said, been a while, but maybe look forward to talking to you more often.
Thank you. Thank you, Neeraj.
That's Meghna Malkan and some things. So keep Wipro at the back of your mind. And from among stocks, I think PFC was something that she recommended. But we brought up IT with her because it's a great lead into the next conversation that we are having with Abhishek Kumar. He tracks IT services at JM Financial Institutional Equities and joins us right now on the show to talk about, well, what's really happened. Abhishek, good having you. Thanks for joining in. And, it took me by surprise, but in the morning when I saw the kind of reactions that we did to most of the IT names, and then when we are just trying to dig a little bit further into it, one of the, our understanding was that, one, that the index had been beaten down so badly, and Infosys did not speak about projects getting pushed the way TCS and Wipro might have. And maybe that could have been one trigger. But I'm just trying to understand from you, what explains this frenzied move in IT today?
Yeah, hi, good afternoon. Thanks for having me here. So yes, Infosys did not talk about cancellations or pauses. See, there is one thing. We have three results so far: TCS, Wipro, and Infosys. There is one common theme, that I am sensing. That is that while near term, maybe a quarter or so, the visibility is uncertain, but none of the players sounded any alarm when it comes to full year or medium term. Right? None of them have seen cancellations. It is mere pauses. One such example is Wipro, when they said that one large SAP program has paused. Now, SAP implementation can only be paused. It can't be, it's unlikely to be cancelled because the end client might have already paid for the license. So these are, classic example of pauses which can go away, once some uncertainty lifts in the environment. And Infosys was the first one to give a full year guidance, and their guidance, in my view, is actually encouraging. That's what we wrote in our note also. Encouraging yet realistic. Encouraging because if Infosys had met its 4Q expectations, the guidance for the same CQGR that their guidance is implying now could have taken the guidance up to close to 3 to 5%, which is what our expectations were. So that means there is no material deterioration from the pre-tariff view that we had, which is built into at least the quarterly, growth cadence that they are building in their guidance. So that's encouraging. And we think it is realistic because, if you look at their last year deal wins on a net new basis, it was $6.5 billion of net new deals which they won. They also indicated on the call that the deal tenures have come down. That means, the conversion would be faster. And at 0 to 3%, the incremental revenue they are building in their guidance is just $0 to $600 million against net new deal wins of $6.5 billion. So I think it is realistic, achievable, and it kind of puts a floor to the expectation, given this is the first one which has come out with the full year guidance. So looks like everyone is building in, things to stabilize or improve as we move through the year.
Point taken, Abhishek. Harsh also joining in. When I'm looking at valuations, Abhishek, when I'm looking at past averages, stocks don't seem to be trading at a deep discount to past averages. So correct me if I'm wrong, that the move that we're seeing today is largely just on the back of some bit of positivity that's starting to get built in versus what was earlier anticipated.
Yes, you're right. So in terms of valuation, let me first tackle that. Companies like Infosys, TCS are trading close to their 10-year average multiple. Yes, not at a discount. If we take the last 5-year average PE ratio, then they are trading almost at one standard deviation below the 5-year average. So may not be at discount to long-term averages, but not expensive also. I would say they are reasonable. And if the kind of guidance which Infosys gave, if that kind of gives some visibility in terms of where the earnings could land up, that should give confidence to the investor that earning downgrades from here probably would be limited. And with valuations at 10-year average, etc., the risk reward seems then favorable.
And what do you make of the downside risk to this, Abhishek? Because oftentimes in the last year or so, we've seen some bit of positivity with regard to commentary, which has been recognized by the street. But thereafter, the factors that follow in terms of a rate cut, it has tended to get pushed. In terms of demand recovery, that too has been weak and fleeting. Do you believe that some of those factors still are elusive to a large extent?
See, I look at it this way. If we look at the deal wins by some of these players, whether it is TCS, Infosys, and Wipro, because that's the only tangible data points that we have to build our revenue forecast for future. And all three of them have done very well in terms of deal wins last year. One can argue that Infosys deal wins in FY25 was weaker than FY24. But FY24 was a record year. But on a standalone basis, all three of them have done very well. So their order backlog, in my view, is very strong. Getting into this uncertainty compared to when they went into COVID. So that should give some visibility into revenue. Yes, discretionary spend might get pushed out, but with where the valuations are and expectations are, I don't think Street is building any uptick in discretionary spend anyway. If that were to come, that will be an added upside.
Okay. Abhishek, now the one thing that came out in the commentaries was that I think at least in Infosys, I distinctly remember having seen that they mentioned that the European auto sector is looking weak. I'm changing tracks here a bit, but they said that the European auto sector has looked weak. We know, there is telltale evidence to suggest that there might be issues there. What happens to ER&D? And I don't just mean KPIT, which is only automotive, but some of the others also have a large automotive presence, right? And Europe forms a bulwark there, if I'm not wrong. So what happens to ER&D earnings and possible commentary? How would you, as somebody who tracks this space closely, think of the ER&D stocks for the near term?
Yeah, so look, across the board, ER&D stocks have taken a beating over the last, 4-6 months, ever since, European auto OEMs started flagging off some challenge. So that is not new. A lot of it is in the price. KPIT has come down from its high of 1900 to now less than 1200. There are two ways to look at this challenge. There is no denying that auto OEMs in Europe and maybe in US also are under a lot of pressure, more European OEMs. One is the direct impact is, they cut down their R&D expenses, which they have talked about. Their R&D expenditure probably peaked in calendar 24. But on the flip side, these kind of crises, and as for us who track outsourcing companies, the wave of outsourcing always have been triggered by some or the other challenges at the end client's market, whether it was Y2K, whether it was GFC in 2008. And I think auto R&D, where the outsourcing penetration is still single digit, there is a huge scope of more outsourcing and more offshoring. Whatever outsourcing has also happened in this space so far has gone to a lot of near-shore players who are in and around Germany and France, etc. A lot less share comes to India compared to IT services. I think that can change because they have no other choice but to reduce cost and still do R&D, which is good quality at scale and lower cost. So India provides a very good alternative. So I see this as not as a threat, but as an opportunity. It might play out maybe over the medium term. But I think clearly the outlook from a medium to long-term perspective is very good for the R&D plays.
Okay. Are you making? I mean, we were. Somebody in the morning was an editorial discussion was making a point about maybe large caps per se, ER&D plus IT services, large caps. The near-term bottom may have been formed. Can't say the same for mid caps, small caps. Do you do a bifurcation like that, or is it very bottom-up, earning specific?
Yes, I think the better way to do it is bottom-up right now, because especially mid caps, they have their own nuances. They are not as diversified as large cap. So we need to see what's happening with their verticals, who's exposed to tariff risks, etc., who has the momentum of deal wins behind them, execution, where the valuations are. So yeah, I would be more bottom up when it comes to mid caps.
So what within bottom up, Abhishek, if you can give us views and names?
Yeah, so in mid cap space, we like Hexaware. Hexaware, I think, has corrected below its IPO price. They in their first earnings call, they indicated 2 large consolidation deals that they have won in their top 3 accounts, and I think they're confident of double-digit growth this year. So I think from a valuation perspective, also Hexaware makes sense. So we like that in Hexaware. As we discussed, I like KPIT. That's more on the R&D side. And, Coforge also after correction looks good. They also have deal momentum behind them. So I think, yeah, these are some of the mid-cap names that I would prefer right now.
Abhishek, last question with regard to how AI or your views with regard to how AI is going to disrupt the space in some fashion, in a large fashion. Will the AI winners be different? And how do you identify them? A difficult one, but if you have a view.
Yeah, so it's an evolving discussion, as you can imagine. I think there are 2 aspects to AI. One is the volume compression that we are seeing now, probably when everyone talks about productivity pass back to clients. Essentially, they are doing more with less, and therefore they are billing for less people. That is playing out now. But the other equally large, if not bigger, aspect is new use cases, new areas that can open up for IT services players. I think that has not taken any shape, or we cannot say for with any degree of confidence that when that will start, if at all that will start. But my sense is that, with AI getting into everything, it's a matter of time before the end clients of IT services players will find more use cases There could be, some of the identified opportunities are something like legacy modernization, very old applications that have not been modernized because nobody knows what they do. And that can open up a large opportunity because AI makes it possible. So net, I think it would still be positive, but the way it is evolving looks like all the negatives are hitting the players first, and then the positives will follow. So that would be my view. I would still be optimistic about the scope of AI. I mean, just imagine when every single industry in the world is getting impacted by AI or becoming, more tech focused. The only industry I would worry about is IT services. Actually, there are other, like creative content creation or so many other industries, creative writing that can be cannibalized by, by IT services players. So IT is something I'll not worry about just because of AI.
Okay, not as worried with regard to AI, especially from an IT perspective. Thanks so much for joining us this afternoon, Abhishek. Good having your views on a day like this when IT has been a real mover. In fact, pulled off a bit of a blinder, if I can call it that. But what we'll do, we'll slip into a very short break. But before that, we'll leave you with our conversation with Mastek. Weak set of Q4 numbers. But we spoke with Umang Nahata, the CEO of the company, about the quarter gone by. Given that an IT discussion was at play, listen into a slice of that.
The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we have to partner and get subcontractors in our business. These are also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We are almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier, and therefore it's a one-time charge for the prior period.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.